And good morning, the 26th of January, 2024. Interesting overnight here. Obviously, for the longest time, we're higher outer range, and then now we're back down into a higher in range open anticipation here. The overnight is wild and woolly, kind of like the last few trading days have been a sell off and then a pullback. So essentially, a big rotational story. They're trading it, right? They're looking for value and they're trading it. Here's our micro composite. Micro composite VPOC, or the MC VPOC, is at 4883.50. You see we've got a 1, 2, 3, essentially 3 days up, and then an inside day yesterday. Inside day with, I think they call that a doji or whatever. It's basically there was no decision on value. They couldn't decide which way to go. They traded it up, traded it down, and ended up right back where they started. So essentially, we'll be looking for a higher. Oh, now wait a minute. I might be out of whack here. Hold on. We might be lower in range, depending on where this thing goes. That's always kind of the problem with the open. It's once I set this up with the statistics here, and this is the cloud note column, which are the price levels pushed by IRT. Then based on the IRT study, I put the statistics, the probability statistics that these different price levels will be hit based on the open configuration. And today, the open configuration was, in my opinion, when I did this, higher in range. So looking for the close here. I'm not seeing it. There's yesterday's open settlement value. We could well be now moving into a lower in range, which would change these values a little bit, and I'll do that. Coming up. The way that works is pretty simple. It is an IRT study, which done here. So this is higher out of range, higher in range, lower in range, and lower out of range. Obviously, this is a gap up, this is a gap down, and these two are over or under the close from yesterday. So if it's lower in range, the probability of the POC, or the overnight POC, being taken out goes to 84.5 as opposed to 83.1. So not one hell of a lot of difference or anything to get all shook up about there at this moment. I will continue to monitor this. I have a chart that I post to the TLab every morning at 8:20. Just a couple of different ones throughout the day. One, the numbers and economic calendar for the day at about 6, and then I post this overnight to give these people that don't have IRT an opportunity to see all the levels historically where we were. This is yesterday's regular trading session. This is the overnight. They can see all these numbers that they might need to add, that with those folks that don't have IRT. And then I also push these cloud note levels and have made those available to those folks. They could put it in their book map and have the same levels here. Yeah, we're gonna be definitely lower in range now, because we're approaching now the yesterday's mid and the IB low. So yeah, definitely going to change this to a lower in range, and I'll post this. Make this post, and then I will be able to go on with the stream, on with the show, as it were. Here we go. Just bear with me a second here while I click through a bunch of screens and get this thing published over there. And there's that. That's out of the way. IRT's back in place on our trading screens. So here we go. I'll change this to lower in range. And then I'll change this percentages so that when I'm able to. Again, that's not any, it's a couple of points, maybe. So what? These are just guidelines or suggestions. The way these are the way these are calculated is based on the opening type, and is the percentage that the overnight high was touched out of 2,003 days. First of all, it's narrowed down by how many of those 2,003 days is lower in range, and then within that configuration or constraint comes the price levels. It's real simple. This is my book map, obviously. No indicators. Mid, VWAP. Full session VPOC is the kind of a muted yellow. That is this column, which is full session. Started last night at 1,700. Will continue through to 1,600 today. This is the current, the RTH, recent RTH. Wow, sneezes. This is the RTH volume profile. This will reset at 8:30 this morning. And this is the volume profile of the chart. So this is profiling, showing the volume profile for whatever data you have displayed over here. Scroll in and out, changes, right? Get it down there, it'll go. See how it moves, all right? So there's the mid, VWAP, VPOC for the full session, POC for the regular trading session. And this goofy looking blue line here is a correlated market that just gives an indication of the direction of the NQ. Obviously, the price is substantially different, but it accurately represents the movement. NQ's trading at about 17,548 right now. And of course, we're here at 49.1675. So, yeah. Well, So let's see what we see here. This is the micro composite or the high level chart. You see that this price right up here is a 32 quarter. Is a low volume node in this. This is the volume profile for all of the days incorporated in this chart, which goes back a couple thousand. This is the current micro composite here. When this opens, there'll be a new little guy start over here. These green lines are the high volume nodes within this micro composite, and they are pushed to a separate cloud nodes column, which is right here, the high volume nodes, and that's where these come from. This is that highest, or whatever you want to call it, low volume node up there. And I find that the high volume nodes kind of correlate to some degree. Actually, that's not true, just looking at them. I will give some thought to perhaps pushing another column of the high volume or, the bigger session or higher time frame, highest time frame that I chart, which is this gray volume profile over here to the right of the micro composite. So when the market opens, I will change these from the full session, these two charts. This is the ES and this is the NQ. I'll change these to the regular trading session very simply by just selecting this session configuration so that the levels then are updated properly and pushed to cloud notes. So what's happened overnight? There's a lot of trading going on, and it's pretty much what that is. It's pretty much a well-balanced market. I did that by mistake. I didn't mean to do that. It is a pretty balanced overnight. A couple of different distributions here. Got a lower distribution, kind of the middle two, I should say, and then a little one at the top. They didn't like that. They didn't like this, and now they're kind of trading back and forth. Yesterday's trade was pretty well balanced, similarly. It's an auction, and this is their auction price. That's what's going on. Open auction. Don't really anticipate. I would say that the price is about evenly skewed. I don't think there's a big percentage short or long. I can see that over here, but I got to change that info box. Wouldn't really expect responsive selling or buying because it doesn't look to me like anybody has got a real stake in the position. We're just going to be almost exactly here was closed right up here, pretty damn close. So it's kind of it's Friday. There's no real news. There's no holiday weekend, but it is a Friday. So actually, it's the last Friday of the month, though, if I'm not mistaken. Yeah, middle of Jesus. Boy, time flies. The first of the month is next Wednesday or next Thursday. So this is the last Friday in the month. That might have some impact on things. And it is earnings season. There's not much out today. Two or three of them. Two or three today and two or three on Monday. American Express and some lesser market movers. So 2 minutes till the open. Good opportunity for a slug of water. And I think everything is under control here. IRT is ready to switch over. I don't expect to see any last second POC movements, and that's not any kind of a magic fortune telling. That's very simply, here's the POC from yesterday's. This will be the jump up to wherever we open to start with. This is full session, and it's very simple. It's the volume of contracts traded at price. This is here because that's the highest. This is here because that's the highest volume price. You can see it graphically, and you can see the number. And when this number exceeds this number, POC moves up. Really, the POC is just the point most traded at any price, and it changes throughout the day. So, not mysterious at all. And here we go. Ding, 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 ding. The open is going to be now, I guess. And IRT is kicked over. You see how this immediately collapsed and is now graphing. The POC jumped right up here. So we'll throw in our first VPOC migration. Bell's a little late there. Not much of a swing high or a swing low yet, but it looks like they're heading for higher country. So that value area high statistic, whichever it is within spitting distance, one tick off of that. I would consider that to be the opening swing high, actually. And this to be the opening swing low, I think. And well, not really. No, that's really this was in the open or the regular trading session. So up above, we have settle previous RTH high and the ETH high, which is a fairly popular statistic to capture in the regular trading session. Bumping up on that liquidity there at the value area high, previous value area high. Got a migrating VPOC. That's typically can be indicative of a structured trade. But taken mechanically, I've gotten bit way more than once on that idea. Not to say that wasn't a great long, but the way I approach the trading business is with a risk neutral setup, which is real simply 2-lot package with a 12 tick stop. The first target is a 12 ticks positive. Therefore, the second contract is writing free. That's about it. Real simple. And I've just activated the trading mechanism now, and I have both selected because I initiate trades with a keyboard and then manipulate stops and targets with a mouse. There you go. Trading up here, I wouldn't. So was that a reasonable deal? Yeah, this VPOC migration up was a reasonable long, I guess. The scale would have been here at 3 points, and then we traded up to 4. Not much second T2 in the books yet, but so far scaled. The trade would have been scaled and risk neutral, and we'd be scratching our head, rooting and cheering for that overnight high or the previous high, which is here, or the any kind of level north for a target. And I am not in any trade. It's real obvious when so the trade lines, entry, break even, stops, targets are all displayed on the chart. Trying to be as transparent and accurate as I can. The IB high and IB low are simply the high and the low of the first 1 hour of trade. They migrate up or down as price moves. They don't backtrack. In other words, the IB high will not ever come back down here. It is the high and the low of the first hour. That's real simple too. Most everything here in the way I approach the trading business is just math, statistics, and plain as the nose on your face. Nothing mystical, black box, stuff. That's the quickest way to go broke, I think. Treating trading as a statistical business, you identify a potential setup, like, for example, the VPOC migration, which I mentioned. You see how many times that trade You capture how many times that trade is triggered and has, what outcome it has. And you determine statistically if there is a positive edge for that trade with those rules, specific rules and conditions or not. If it does have a positive edge, you take the trade every time it presents itself. The analogy for the trading business and any other statistical business is a casino, the casino gaming side. They calculate the edge on blackjack under the specific rules, and they trade every hand exactly the same way, relying on the law of large numbers to bring the percentage across the table in the form of profit. And I guess if you've ever been to a casino, you're probably pretty aware of who's making the money. That's it in a nutshell. It in a nutshell. I wonder if I can do all this at the same time. I'm not exactly Mr. Multitask over here. One of the things that I struggle with is to have a more is the timestamps and whatnot, and figuring out exactly how to do them without struggling. Well, that's disappointing. I've been talking to the muted mic there. So what I was talking about was this VPOC migration up, test back buyers, and now you're in at, say, 21. You've got to be out scaled at 24. So it would be scaled and risk neutral. But at this point, based on a 21 point at 49.21 entry, you'd be stopped out right there at 18. Yeah, well, maybe by a tick, but boy, that's cut it pretty fine. We'll see. So now it's migrating back down. Now the VPOC, current session VPOC, has now migrated down and aligned with the full session. Here and here, here. VWAP, mid, right on top of each other. Obviously, at the beginning of a stream or trading session, these things, the current session VPOC can move all over the place because there's so so little volume has been traded. It's 4,400 here, and let's say it's 3,400 up there. So 1,000 contracts, the VPOC is going to move up from there to there. But as the day progresses, those will require multiple thousand contracts to move. So that's how that works. And that's one of the reasons why I put these migrating VPOC flags here. It's easy to see now what happened. There's the open, boom, 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 right? But as the day progresses, they scroll off to the left and I don't know about you, but I lose track of what I'm doing. And as a result, flag these. Makes it just a lot easier. Try to keep my focus as narrowed as possible. And as I was starting to say earlier, I'm pretty conservative about trade. Perhaps I'm starting to be a bit worried that I'm suffering from paralysis by analysis to some degree, but I generally wait for the IB30 period, which is the end of the first 30 minutes and before the 1 hour mark, the first 1 hour. I'll explain that in a second. But that's the first statistic that I look for as far as trading. And I will, some guys on the TLab, for example, they'll have 6 trades done by the opening swing. I just don't do that. Now the IB stat, the original IB stat is, as I explained, the IB high and the IB low are nothing magical. There's just the high and the low of the first hour. The original stat, which is a 90-some%, says that after the first 1 hour, the IB high is set, the IB low is set, and that price will take out either the high or the low. 90-some% of the time that happens. Someone in the TLab has calculated that the IB30, which is essentially the same thing, taking the position of the IB high and the IB low where they are at the first 30 minutes or 9 o'clock, price will extend up or down in the second half hour. So, now kind of change the names around to IB30 and IB60. So that's the terms I use in the description for the trades and also in this dialogue. The purpose of the stream here, obviously, it's not a recommendation for anything, and all the disclaimer noise is in the description. This is my video journal. I narrate it, which is not really my nature to continually talk about it, but I have to do that so that when I replay and review without the heat of the market, I can hear what I was thinking and see what I was seeing, and then try to refine my trading on that. I've also kind of made a commitment to myself. Well, not all, sort of, I have, to not take any trades off stream. Therefore, I have complete transparency with regard to that. And very obvious when a trade is taken and there's a green entry line and there's a stop and a target and a break-even line, and all those things are clearly identified on Bookmap and recorded on Bookmap. So that's another good thing about it. It records everything that happens while you have it on. And in my case, I let it run from 1700 the night before through 1600, and then I shut it off. That means an entire ETH and RTH session are captured. and any trades, any movement, any indicator stuff, any of these prices changing is all recorded. So it's about as transparent, I think, as I can figure out to get. And now we are at 8:46. There's no news. The only number that was out this morning, I believe, was at 7:30. So that should be out of our hair, unless somebody drops out of the sky with something that's a market mover. Very tight range so far, 16 to 25. So 20, 9 handles total range so far today. Here's a test up to the POCs. I guess you could start to think about this in some term of a mean reversion, which means outside edge in, reversion to the mean being the POC. For me and my risk neutral setup, I have to have a minimum. The first scale is at a positive 3 points or 12 ticks. So if I were to get in down here at 1950, 1975, this is only 2075. That's 1 point. 4 ticks. That's, not going to work. There's not enough scale before the first obstacle, or not enough range before the first obstacle to scale out. And that's not to say that this isn't a trade that somebody would take and be making money. I'm just talking about me. I also have a kind of a holdover from the market profile days that I just have a problem not diddling in the middle. I don't want to diddle in the middle, which is the POC. The POC is by definition the middle of the highest amount of contracts traded at price. The actual middle of the range is the mid. Different. The POC is the point of control, and by definition, then, it stands to reason that price is going to slop back and forth over that a bunch of times and increase the probability that you're going to get spanked. So I have a hard time with that one. Kind of one of the reasons I'm a little bit leery on the VPOC migration is you're taking a trade from the VPOC out, or middle out rather than outside in. Another point about the outside in or mean reversion trades is they are asymmetrical. So if you're down here, what have you got? You got 4 or 5 ticks to the low. If your stop's down here, it's 5 ticks away, and you've got this upside. Now, if you take a trade in the middle of the market, you take a trade short from here, your stop's got to be above these swings to make any kind of common sense, never mind all the fuel that's living above these levels. So that's the theory behind the mean reversion trade. It's also asymmetrical location, which I think everybody agrees is a good idea. I don't have a stream deck or any of those kind of things. I use just my mouse and a keyboard. So occasionally I get balled up with muting the mic or whatever. But again, this stream is not because I want to become a Mr. Beast. It's because I want to be a Mr. Beast trader. Now, if somebody wants to give me a couple million subscribers and YouTube pay me for it, I'm sure as hell not going to sneeze at that. But that's not the purpose here. My reason and focus for doing this and purpose for doing this, as I said, is my visual virtual journal. And I also have a Journalytics by Jigsaw, which is an online journal, and I have a local Excel journal that I've built years and years ago, 2015 or so, and I've kind of updated it recently to be functional, the IRT automatically downloads or pushes out to an Excel page on my workstation that has that journal, and I can upload that data automatically into the data table, and then all the calculations and stuff are automatic. So that's pretty handy. Try enabling me to figure out or to analyze, for example, in all instances where we opened lower in range as an open type and a context of, say, rotational, which is what we are now, how many instances of IB30, mean reversion, all the setups I have were winners, and I can identify each one of those then and see this expectancy and the win-loss rate and all that stuff. The idea is to try to get to mine or discover those positive edges and then take the hell out, take them all, just like Vegas. And here we go. So this needs to go up here. That migrated just before the open. That's the overnight point of control. That's an extremely common stat, usually the highest one in every RTH session. They didn't quite get there yet, but boy, that's about as close as you can get. I'd say they did, actually. Horseshoes and hand grenades, but there you go. So that stat is essentially taken, the overnight point of control. And we got about 8 minutes to the IB 30. So I will be right back. And we definitely took it out now, didn't we? Okay. The naked POC, which was yesterday's POC, is also gone. That's not necessarily a stat, but it was a naked point of control, and that's been taken. You can see that graphically here. This red line is the point of control from yesterday. You can see it was taken out there. The yellow line is pretty handy. That's the developing point of control, IRT. Handy program. The big, I'd say one of the more challenging parts is, in order to be successful, especially with statistically based trading system or trading business is to be properly aligned with context. Obviously, you want to be going with the flow, right? The age old, the trend is your friend and all that stuff. And that's the truth. These guys that continually are counter trend trading, Tom B in the Traders Lab has an analogy. You want to be with the advancing army or the retreating army. And I guess that makes a lot of sense, right? So, and that's also the old adage, that spurns the old adage of buy the dips and, sell the pullbacks and all that kind of stuff. So that's basically, you're looking for a way to align yourself with context. And that's one of the, I think, things that a lot of newer traders, myself included, and I'm sure as hell not a newer trader, but struggle with pretty much continually. You get probably better at it, or at least more disciplined to stick with it. When you identify the trend, you don't be busy, trying to pick tops or bottoms and all that kind of thing. So 4 minutes in the IB30 stat will be involved. Again, that is that the IB high and the IB low are the high and low of the first hour. The recently calculated statistic is that in addition to that, the low or the high at the time of the beginning of the second, within the second half hour is taken out. So in other words, this is, let's say in 2 minutes, this is going to be the IB low and the IB high so far in the first 30 minutes. And the stat is quite high, high 80s, that one of these or both will be extended further in this second 30 minutes. So there you go. And I'll be looking for that because that's something I like to do. I'm not sure whether this is going to work out or not. I spend too much damn time typing. Okay. Yeah. We've taken out the EVPOC. We've taken out the previous naked volume point of control. The IB low is as it should be on the low, and the IB high is as it should be on the high, which is just below the previous RTH high. In other words, it's just below the previous RTH high and above settlement and close. Well, I'm not sure where close went here. That's probably covered up. Anyway, yeah, this is settlement, so that's yeah. I have to look back at my numbers to see where the close is, but generally what happens is these stats, one will cover up the other one, and sometimes I can get it to show both by just hovering over the top there, but not so lucky today. And here we are at a pretty much of a Bill doesn't trade stuff or boomer, however you want to refer to it. There's we had a slight POC migration down, but we're stacked right on top of the mid and the VWAP and everybody else, right? Of course, had I been trading, not typing, we're down 2 points and possibly heading lower. The problem with that is there's all these traders down here, retail guys, have their stops living up here. That's one hell of a lot of fuel. To short against all of that fuel within a point, that's not something I'm going to do. I don't think that that's statistically sound. And now, coming up here for the test, okay, 19 test may be down. So you're at 19. Means you got to get down here to 16 for the scale, risk neutral scale. And where's the target? So far, we've been mean reversion this way, right? I'm trying to think this through verbally. It's a little bit weird, but that's the way the stream will work as my journal, I guess. And I stream this because then I can, monitor it on my phone or whatever else, whatever device, as opposed to recording it, which I do, but recording it and then how do you listen to it unless you're standing on the same machine or wherever you pushed it. I could put a Dropbox, I guess, or somewhere, but this stream seems to be pretty slick and works like $1 million. OBS is free, so Yahoo. What did it say? Yeah, so there we are, assuming that you were trigger happy and got short on that VPOC migration mechanically, still haven't scaled. And there's this VPOC and fuel up here. Now, will you scale? Ooh, within a tick. Still haven't scaled. I'm not saying that that's not a good trade and that I won't be kicking myself for not doing that, but I'm reasoning out the logic verbally here. And we have crossed that 9 o'clock hour. So the first half hour is done. And that the IB30 stat says then that this IB low or this IB high will be extended upward or downward in this second 30-minute period. Then after that, the IB is set and they no longer move. And that older stat, the IB, which I now refer to as the IB60, comes back into play. You would imagine, or, rational thinking would be that there would be the IB low. Here it is back at the entry, right? So the scale is still not taken. And yeah. Would imagine that it would be the IB low that was going to be extended in this second 30-minute period just by where we are down here at the bottom. We've got this consolidation micro composite building up down here. We got, what is this, 6,700? We have about 1,500 contracts down here to bring it down. 2,500 now, I guess. 27. That's 40. No, that's 5. Yeah, about 1,500 contracts to bring the POC, migrate the POC down here again. And there's all, and there's still all that fuel living up above the POC, VWAP, and mid. So in my view, I would like to see him run it up and take those stops and then bring it down. That seems to be a more logical thing for me. And there comes the full session migration. I've noticed that has a lot of weight. I have to collect some stats on that and figure out exactly how to go about that. But that seems to be a pretty good mover. And as it drops 3 points. Now the scale has been now the risk neutral for any one of these pair entries would be risk neutral here at 16. And another full session VPOC migration lower might be a good position for a stop. I mean, for a trade for me, actually. That was not my finest hour there talking instead of taking that lower move. And as a result, I've missed that momentum and won't chase it. So the IB30 stat was fulfilled. There's was the IB at the time at 9 o'clock over here, and it's now been extended lower. So that stat has been satisfied. And it could happen 15 more times between now and at 9:30 when the IB is actually set, but that's not part of the stat. The stat just says that that'll be poked. It'll extend lower or higher in the second 30 minutes, and it's very definitely did that by about 2.5. Doesn't say how much, it just says that it will be. And this could well be now now that that's been done or tested and not really looking below for anything else, that could be we could be entering back into a mean reversion setup where this is the mean, remember, because this is the regular trading session. That's this one. This darker one is the POC for the full session. So if they trade up here to the mean reversion of this, mean revert from outside edge up to the top, I mean, conceivably. But mean reversion is obviously by definition reverting to the mean. Boom, right there, which is a POC. Then after that, it's helmet, actually after your risk neutral scale, then it's helmet. I don't know whether to admire some of these guys I see texting in the TLab about all the times, all the trades they've taken and the scales, whatever. I kind of tend to believe that's a lot of BS and bus tickets. I don't know. I'm not talking about Tom, of course. I'm talking about, he doesn't ever really type about, he doesn't call trades or post his trades or any of that stuff, which is kind of disappointing. I would prefer if it was real-time narration rather than RMT, which is my euphemism for rear view mirror trading. What do we got happening now? Nothing really. We're on this liquidity, which was the naked volume point of control, essentially. That seems to be kind of moving the market, adding a bit of support there. So the next structured trade that I will probably be anticipating will be an IB60 statistic. Also noticed the last couple of days, and probably just because I haven't noticed a lot more days, the developing value area low is, of course, a substantial area. That's the low of the volume of that's the value area, which is 70% of the trading volume or trading range. For the developing or current trading session, the value area high is from yesterday, regular trading session, and the developing value area high is today. Now we tested up to the mid VWAP. POC migrated down. So that is a possibility that what's going on here? We're going to get somewhere now. Lower, and I was busy looking at this developing value area high story and low. We just tested up to that VWAP and VPOC, but there is a trade that says VWAP to POC, but it's only 2 points. So that's not enough range. And we could well trade now past that and smoke out the bottom of this thing, or, Acapulco cliff dive, who knows? But I'm trying to be real in order to have a statistically operated and driven business. Can't vary things, So there's only 2 points from the mid VWAP to the POC. That is not enough range for scale, because the rule says that the risk neutral scale has to be ahead of or before the first obstacle. So there you go. There you go. I'm not, and this is probably a stream that won't get millions of followers or subscriptions, because I don't just, trade the hell out of things. And it's a methodical and a thought statistical driven process and business. But my homework and stuff is, and, as I mentioned earlier, the analogy of a casino, if I'm, 1% as successful in my trading business as any casino that I've ever walked into is, I'm going to be a pretty happy camper. And they are absolutely statistically driven. That's the whole premise of a casino. Might have started out being owned by gangsters, but they had some pretty sharp bean counters that did the statistics first, and then and they figured it out from there. And that is it today, and for the past years. Stops and scratches are cost of production. You just have to take every presentation or every instance of a statistically of any setup trade that has a statistically significant and proven positive edge, and then the law of large numbers manifests the profit. That's how it works. And I have done enough reading, and go to Las Vegas or any casino town and ask yourself who is apparently making the money. And yeah, that's a rhetorical question. So here we are, smacking back and forth at the mid and the VWAP, and bummer, 1.5 points to the POC. So that's exactly nothing to be interested in as far as a structured trade for me. It is a structured trade. The VWAP mid, and in this case, they're both on top of each other. So Yahoo to POC, but there has to be the range required to get the risk neutral scale, and that must occur before or ahead of the obstacle, the first obstacle. And then, the targets can be wherever. But you also have to, maintain at least 2-to-1 risk reward ratio in order to have a timely profitability. Because if you've got a 1-to-1, okay, and you take a stop, That's fine. You hold your, you don't move your stop. You take a stop. That's normal. Very normal. Because this is a random business and the probability of the very next trade is 50-50. Case closed. Whether you want to believe that or not, that's the truth. And it doesn't matter if you've had 25 losses in a row or 500 wins in a row, the probability of the next trade is 50-50. Case closed. So if that's the case, you have to have, you take a stop. If you've only got a 1-to-1 risk reward ratio, for example, you've got to make 2 successful trades to make up for that stop. 2 wins to make up for the stop or the loss. And so having a 2-to-1 or greater risk reward ratio shortens that period of time and helps compensate for those stops and losses. And because you're trading identified, statistically proven edges with specific rules, it's not a crapshoot. You know where those trades are going to manifest themselves, right? And so you can anticipate them arriving and you can see where your targets would be. In this case, if I was going to anticipate the IB30 to extend again, or it turns out we get past 930 and it's the IB stat and I'm anticipating lower, I could enter that trade with a target, say at value area low down here, or at least at this high volume node. And it wouldn't be a big mystery. When I got to a setup area and took that, there it is, right? And then you take them all. Those things have to be figured out by yourself from the data. From the data. And what do you call this? There's little, here's the IB or the POC migration lower, and then we go up, and then we come back down. That's what I was referring to earlier about the frequent movement or the easier movement of the POC early on in the market, because these numbers only have to vary a little bit in order to get this POC to move. As the day progresses, that numbers become larger, and by extension, then you have to have more volume to get the POC to move. So I think it has more significance, my opinion, for whatever that's worth. Well, bummer. No trade today so far. And, I've had one trade this week, actually, because I spend a lot of time analyzing this and trying to stick to my guns as rigidly as possible. And that might not be the right approach, but that's what I'm doing now in order to capture the data I need to identify the statistically significant positive edge. Or, if you think you got a setup that's great and you discover that you're losing money, well, that's good news. I mean, that's, important news to have, right? We seem to be bouncing a lot off this overnight POC and the previous RTH point of control, which was here. It was a naked POC when this started, when the day started. And we've got the IB low down here now, 15 to 12, 75. That's just squeaking out 3 points. That's just squeaking out that risk neutral scale. But in this configuration today, or this context today, kind of looks like it's lower, but I'm going to look over here at the RTH or IRT. Technically it's lower, right? It's the lower highs and lower lows, so that's lower. And the IB low has been extended a couple of times now. The IB high, not so much. So, and of course, this, as I start pointing that out and talking about it, here they go. Here they go. And it's important to recognize that this is the mid, i.e., it's exactly the middle of the range, right? So when it gets to here, it's a crapshoot. It's exactly even to the IB high or IB low. And once again, there is a structured trade that is a vetted trade, mid or VWAP to POC, VPOC, but there's no range here. It's just a point. So there's no meat on the bone, quote unquote. And I would be quite pleased to knock a nice risk neutral to both targets and throttle back. So the IBs will set at 9:30, 9 minutes. We've now traded above mid. So I suppose you could say there's a higher probability that we will get to, or at least it's a shorter distance to get to the IB high as opposed to the IB low. Value area high, we gotten up there a time or two. Keep my eye on the developing value area high. Very narrow range, right? Because this is your range and this is the range of value. Real narrow. 1575 to 21, basically 21 and a half. 6 point range across the value area. So it's sneezing distance for them to get from one side to the other, which is exactly what they did here. Developing value area low to value area high, they traded across value. Today's value so far. Developing today. That's how the nomenclature or naming convention is applied. And I suppose probably to a lot of traders that enjoy the rush and the more of the game concept. Now, what are we going to do here? This value area high, developing value area high was probably a good and a missed opportunity on my part. We trade up here to 152 contracts or stops trade out. Back up here to about 3, and we got sellers. Now that was above the mid and the VWAP with a POC below. So that was, 21 to 17. Again, that's just barely risk neutral scale. Yeah. I was going to say I was busy jabbering and missed that opportunity. And it could well be an opportunity, but this kind of trading is too small a range as far as I'm concerned. There's too much risk involved. And back to the conversation about scalpers or guys that like trading as a game, then this is boring as hell and requires a lot of discipline, I guess you could call it, because there's no lack of emotional stimulus or FOMO or all that stuff on my part. It's just a matter of it's all whizzing around in my brain, but I don't act on it. I try not to. And here we test up again to the value area high. Not quite into it, not quite up to the developing value area high yet. I think for the long term, I don't think so. I'm confident of it. When you look at the retail statistics, over 95% of retail traders crap out. Well, I think that that speaks volumes. and pretty much impossible to crap out. Just if you adhere specifically to a statistically significant trade model, trade plan, and use the risk neutral configurations, you'd have to really work it screwing up, or just have an unbelievable string of miserable luck so that you had enough losers in a row to bring your account to, margin call or whatever it is. I mean, but it's Jesus. That's a lot of trades. I have a calculator on that, my old Excel journal, that you can put in the account size and the stops and the losses, and it gives you the burn down. It graphs the burn down rate, the number of trades it would take to reach a margin call. 75, 80 trades losses straight in a row, for example, with this kind of configuration. Well, that would be pretty hard to believe. After about the first 10, I guess you'd probably figure out you were swimming upstream and realize you hadn't been reading the context properly, I guess. Well, we're over developing value area high now and up to settlement. And look who's living right up there at the top of that little area, and where we're going pretty quick. 3 minutes to the IB set, and we're, 3 handles off the IB high. With the statistic up here, the second highest statistic of the day at the overnight high. So would or should I look at this? This is the yes, Renko, so it's easier for me to see and it's not time-based. Here we are. And here we are. That's easier to see. And here we are. Do we expect that more likely, we're now right here at a price check. You see price check at aisle 3. You see that developing value area. And if I can get my mouse moving here. There we go. You see this benefit of having these markers, because you don't see that anymore, right? You don't see that. You got to scroll clear back over here to see when we were up there. And I don't do that. So I try to be a little closer into the market. So we came through that price check at aisle 3. We have the IB statistic up above, or the IB high is living right here, and the statistic, or the IB will set in about a minute and a half, and then that's IB 60 statistic would be on the table. And I'm guessing that's probably what it's going to be. And another interesting one here is that if they come up and exceed this IB high, that's still just an IB 30. And that's, perfectly valid, because the IB set doesn't really set until 9:30. They better hurry if that's going to happen, because they're down to seconds now, but and once that sets, well, we've traded up here already within 2 ticks of it. Yeah. And they could monkey around and get this POC to migrate up here in about 2,500 contracts or so. So that might be a real off to the races kind of thing. So the IB has been set at 9:30. This will no longer move down, and this will no longer move up. The stat then says that there's 95-ish% of the time that one of the two of these will be taken out in this remaining period of the regular trading session. And, I guess it would be a pretty safe bet to say it's going to be the IB high, considering we're about a point and a half away from it, which is disappointing because there's not enough range there. I will also say that it wouldn't be the first time I've watched and I think even captured on the stream where this thing suddenly turns around and the IB stats taken out on the low. I mean, go figure. The old concept about the IBs is that they were the higher time frame when the market opens has business to do, right? They have, market on open orders and all this kind of stuff. And so a lot of volume went through in the first hour. And then it just kind of traded back and forth by the locals and whatnot within those IBs. And there's the IB stat. Further then, if it exceeds the IB, like in this case, takes out the IB high, they perceive that as the higher time frame having more other business to do. How valid that idea is anymore, the hell knows. But there's the IB stat set. We've taken out the previous RTH high, and the next statistic on the book would be the ETH high right here. I just didn't see, I didn't take off down here, which is probably the smart move, but I didn't see the range here to the IB high, and so it just kind of stepped up. And again, I may be suffering from analysis paralysis lately, but trying to be real disciplined and think this through. On the So you see here how the price, how the IB moves the first hour, and now no more movie, and then the IB high IB high has been taken out right there. That's a good visualization of how that works. And of course, this is every trader's, picking tops and bottoms is not conducive to long-term business. I don't believe. And there's a million rationalizations for everything. Well, I predicted that we're going to now the context has changed and we're going to go mean reversion. I've heard and read all of that stuff, but I don't do it. And I don't do breakouts because that, in my opinion, is FOMO and chasing. However, a very valid, strategy and lucrative. I mean, the Dennis, what's his name? Dennis's turtles, the famous turtle traders, Richard Dennis was a breakout trading. That's what their whole strategy was. And, 14 guys made millions. Of course, they had some pretty superior guidance and real deep pockets. They had the support of lots of money. which makes a huge difference. Now, what are we going to do? Are we going to there's another, now we're in the position of looking for an IB failure, which is it's taken out the IB high here. It's traded up above it and comes back down and can't get any higher and bloop, fails. Or the other side of that trade is called the IB continuation. Which of those is going to happen now is what I would love to know. And what are we doing? Well, we tested the IB high and bounced back up. We've got some liquidity levels up here, and we've got this previous overnight high, which has a pretty high stat. In my opinion, there's not really enough range for the scale, and then what target you got to have here, or are you going to throw it way up here? I guess you could put it out in outer space if you wanted to, but I just don't see it's one of those stair-steppy kind of days, and not good for me. If we tested the IB high here, yes, we did, indicating it's probably going to be IB continuation, and it appears to be so. In it at 25 quarter, where you got to be out at 28 quarter, right? That's just your scale. We have not scaled yet, and target is right there. So that's that wasn't viable for me. Wouldn't it be? I don't think that's a prudent trade. I don't think that's a prudent trade. And, shows you what I know. Here they go. So that IB continuation trade right there is working out like magic. Right up to that previous liquidity at 30, or that resting liquidity at 30. And I'll be right back. And so that was quite the little pop to the upside there. on that IB continuation. Seems like a pretty good maneuver. Easily seen over here on the IRT. And we took the IB high up there, down to test, and continuation up. Yeah. Just have to be more proactive, I guess, or reactive or some damn thing. Anyway. So we were rotational and now have extended the swing north to take out those resting targets from overnight. Shorten up here is picking the top. Good idea. We do have this low volume node from the higher time frame right over here. And 5032 is the all-time high for the ES historically on adjusted data. Disappointed with myself that I'm not getting more trades on and expediting that. I'm just like everybody else. Hell of a lot more interesting and fun or whatever else to be involved in these trades. Definitely get a lot of dopamine and chemical dumps in your brain when you're in them. But I think that in the long term, the disciplined analysis and just taking the structured trades that have the range, taking the structured trades that have an identified and statistically proven positive edge, and then have the range and all the other context around them, or rules or whatever you're going to call it around them, is the key to long-term success. And of course, because there's fewer trades, then the targets, you got to maximize that let the winners run thing, where you get the risk neutral scale, and then don't be bringing the stop up and doing all this stuff, and let those maximize the targets. Yesterday was disappointing. To a degree, it was positive trade, but it was risk, trade in the direction I was headed for a target and a trigger. And now here we go. Now they could be looking at squeezing these guys now. So we're over that top. We're still not. Here's how your perspective can change. Okay, this seems pretty high. Oh boy, we're ripping, right? Here we are. If I get this right. We're just trading up here at the moment. So we're still not. Something's wrong there, because we've taken out this high. What's wrong with this chart? And I'm not sure what, actually. There we go. Yeah, here it is over here. Sorry. That was just not showing, updating. So this is today's trade, yesterday's, day before. So we've taken out yesterday's high, which is not exactly a big deal because it was really an inside day. We have yet to take out the high of the micro composite. So yeah, and I'm going to now move this over here, and you'll see these high volume nodes will now be identified, taking this volume so far today into consideration, and that will be pushed to my bookmap cloud notes column. And notice how close we got here to that identified low volume node, which I have on the which I had identified pre-open here on Bookmap. So, see how the anticipating levels and those things are important. Looking at this for that level is probably a reasonable idea, but would be a breakout. And this is pretty goofy here, no real trigger. I don't know what you call that. Or how do you get into that? This is long a pullback, I guess. Leaning on this microstructure volume right here. Overnight high. Extremely low volume area. So that's 29 to 31. 2 points, right? That's not enough range for the risk neutral scale. Seems like this is not being particularly friendly for me, or else I'm just missing the boat. And in MRT, it's really, they're all great. RMT, sorry. Rear view mirror trading. Well, you take these longs here and, your target is up here and then your target is up there, and all that stuff is real easy to do after the fact. And it's quite possible that I need to revert to the way, more of the way I used to trade. Still maintaining all these principles, but be a little more risk friendly, or a little less risk adverse, perhaps, which is, I guess, another way of saying analysis paralysis, less analysis paralysis. Look at this low volume, or this high volume node here in this low volume area, and if lean on this for a long. It's still only just 3 points. So that's pretty, if you're looking, in my opinion, if you're looking for new highs or new lows as your scale target, that's gambling, because where are you going to go after that? There's no targets there necessarily. I don't think that's prudent. Don't think that's prudent. I guess that's the best way to say it. And I would be relatively surprised if they don't get up there and smack that low volume area, or at least test it around that 32 quarter anytime now. But these all look breakout-ish to me, and I've not been successful with that. As soon as I say that, of course, boom. It'll zoom right up there. Now, what do I have up above here? Anything? Not a pinata. There's a big pile of liquidity living at 48, 50. But no levels there that I see. And again, we're getting at the extreme edge of this highest time frame volume profile over here, because the all-time high is just up above here, right? So this is going to taper off to zero, just like any one of these profiles tapers down to nothing when you get to the end of the line. So that needs to be kept in mind by myself. And here we go for that level. Bam. There we are. Low volume MCLVN. There we go. Yeah, that's disappointing that I'm not taking advantage or figuring out a way to take advantage of these sustained moves like this last one here from about 49.15-ish, or the developing value area low crossing up, that's from down here, well, wherever, way below here up to past here, that's poor trading or poor analysis or poor execution or something. Pretty soon this thing's going to start looking like a bit of a trend. Quite obviously, it was a rotational, more or less kind of a down skew, and now it's turned into just pretty much a rip to the upside with brief pullbacks. I mean, if you look at it on the Renko, it's like there was the trade, and then bam, 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 just brief pullbacks, and away you go. So that's poor recognition of an opportunity on my part and not getting involved in it. And now I'm in the area now that I have no targets above there, and I'm thinking, well, why is it going to go up anymore? They've gotten pretty much everybody squeezed out they can squeeze, I would say. The only thing else would be the MC high, which if my eyes would stop watering is well, 49.05. Yeah. And a minute, that's not right. 33 quarter, I guess. Yeah. That doesn't seem right. What's going on here? The hell is that high? It's just tagged right up to that MC high, which is 49.33 quarter. So, yeah, right. Just tagged the MC high. I was thinking I had that a lot. Oh, I had the MC POC, yeah. So this is the way I mark these. Just for my own. So that's the MC high. Was previous MC high. That's my mistake. I didn't have that in there first. And now you got to imagine that well, I don't know if you could imagine there were stops up there because they've pretty much squeezed out everybody that was short, I would think, at this point. Who the hell would be short, right? Who's left? Who's on third? I don't know. Yeah. So anyway, interesting analysis and interesting to watch for sure. The market is always interesting. And assuming I think I've gotten a fairly good understanding here of the context and alignment. I got to get over this concept or this risk aversion and put them on, I don't think that's the absolute opposite problem of early on in my career when I was just a gunslinger and scalping gunslinger. So I thought. So they tested that high once again. And I get, after having just talked about being less risk averse, I am hesitant to pick highs or trade a high, even though it's, as I talked about earlier, this is you have very little risk here. You take a short here and you can put your stop one tick above it, thinking that, because that's where the trade failed in your opinion, or, pick your spot above all this liquidity or whatever you want to do, but the asymmetrical trade. So you have a very small distance to a logical stop location. Now, this is people that aren't using the risk neutral setup like I do, which, in my opinion, needs to be fixed. If you change the stop then by extension, if you change the stop, you got to change the scale target. If you change those things, then those trades cannot be included in the data set because they're different. You can't have a 2-point stop and a 5-point stop and a 3-point stop and and the resultant scales, because that how do you compare them? How do you know which one of those has got the better statistic? So I have to stick with what I got. If I were entered here, I would be say 33. My stops would have been up here at 36. Okay, and I would need to be, well, right now I would be scaled neutral because that would have happened right there. 33. Well, it'd be awful close. 33. So that's the conversation around that. But the larger conversation is the context so far now has changed to pretty unquestionably up. So a short up here is counter rotation, counter trend, right? Therefore, the retreating army rather than the advancing. And you'll only know that the context has changed after you take a stop, or in my case, haven't taken a trade and just observe it, like happened at the lows. So these are all things to think about and work out. It would be great to just be able to code it up and, go to the beach, the gym or whatever, come back and, as Tom says, have an ATM in the basement. Yeah, wouldn't we all like that? So now would be extremely hard for me to short at this point. Just described why. So I need to watch for a context change lower. And what would that be? Would that be taking out a swing low? Here, I guess. Well, where's the swing low? That's the next question. Here, I suppose. Here, maybe. 30-ish. Well, if you want to look at the IRT and the Rinkos, the swings are down here around 30. So it hasn't taken out any one of those, which would suggest that it's going to continue higher and that there's not been a context change. It's kind of hard for me to see to get the perspective of both charts. Well, I guess that's a little bit easier there. for this low volume area and the previous ETH high acted as a support line pretty much, and now trading up here. So 28 half, 28 9 half, 28.75 ish, up to 34. That's reasonably good trade. I mean, it's a good trade. I'd like to be on it. I'd even more like to be on from down here. And that's like the quintessential mean reversion, because if you got on down here, you're looking at the bottoms, that's the IB low, and all the way across and all the way up. And basically without heat, if you look at it. So even if you took it over here, you didn't take any heat, and you're in the money by 15, 20 points. Those are the kind of trades that I need to be able to ferret out and take. I don't have any problem sitting on trades, or, once I'm in, I have no problem moving my stop. I have no problem, sitting in a trade until, after I'm risk neutral. One of my problems, I guess, that I need to really address is the trade management after that point, exactly how to go about that, assuming that I was long here. Okay, risk neutral be about here. Now, what do you do? Do you just leave your stop down at risk neutral, which is way down here, and keep moving the target up? My theory has been to date that once I start moving the target up to areas that are, obvious targets, then I should be bringing the stop up behind it, because I negated my original plan by moving the second target further away for more profit. So I guess I should keep a similar risk, sort of. Maybe none of that makes sense, but I've various people, time included, say, well, you bring it up to the swing lows, or the value area, or the volume area, low volume areas, or lean on the high volume thing. A lot of different ways to think about that. And I seem to always get the stop too close, and then it comes back, and like right here, I would have, for some reason, scaled it up here, and then it will come back and take it out by the tick, and then keep going the way I had planned. And I've also tried the don't move your stop under any circumstances. And of course, the day that I did that, after the day before moving my stop, it came back and took me out for scratch. And, I could have been several hundred or several, 24 or so ticks up. So yeah, it's a real double-edged sword. And the biggest problem with it is it's so emotionally charged. Even profit on the table, FOMO, all those things kick in there. So to maintain a clear, rational, I think it's subjective, maybe it's objective. I never get the two of those right, but you get the point. To maintain a real clear, logical analysis of that is something I'm also working on, and I'm hopeful that this stream and my continual narration will help me work through that. And lots of folks here are taking all kind of profits out, it would appear, on the Traders Lab. I'll give a brief analysis about that here in a second. Yeah, so the Traders Lab is a bookmap Discord chat room. Completely free. Don't have to be a subscriber to Bookmap. They don't spam you or honk you about doing that. It was started by a guy named Tom B., whose last name I have no idea. Professional trader, started back in 1980 or something like that. So the story goes, and I believe him. He just gives completely freely of himself. He's not selling anything. There's no, chat rooms or my website this or my indicator that or any of that crap. And really, really provides a lot of sound, logic, rationale, viewpoint on the market. Trade does a stream from 10:30 in the morning until noon, pretty much every weekday. I think the real deal, and someone that I appreciate his ideas and his thoughts and his commentary, and definitely appreciate his altruism. He has nothing to gain from doing this unless he's maybe he owns stock in Bookmap. Beat the hell out of me, but I don't care. Very successful trader based on his apparent lifestyle. Not flashy or bragging about it at all, but just kind of you can sort of read between the lines that he's not struggling much. And I think a real positive environment, and definitely what he has to say. Of course, there's some BS and bus tickets guys in there, but very few. Most of the Traders Lab people or participants are kind of have the same view and are all kind of tuned into what he's doing and following along. So that's probably one of the only spots on the internet I've ever come across that's the real deal. And I can't say that for all the other presenters in the Bookmap Discord thing, but very definitely Tom B. I recommend that highly. Bookmap Discord chat Traders Lab. There's in the description here is a link to take you to the Bookmap Discord server where you got to sign up, of course. So you have a username for the Discord thing and all that. And then you go to the Traders Lab, Tom B. There you go. And I would like to have done something there. I'd like to have been long at that 14, huh? Up to about 34. That'd be handy. 20 points. That's nice. Nice Friday. Nice Friday. And in the meantime, what do we got now? Well, we took out that high, 34 quarter. Now we're fussing around low volume, kind of bounced off the low volume node at 28, 29-ish and back up here to the 30s. Got quite a bit of volume parked on top right at this below the low volume node from previously. Oh, look here. They took out the MC high, extended the MC high up. So that's a new deal while I was busy talking. Yeah, obviously the trade is up. Was this a pullback to get on the long? Probably. And there was a level here. It was a previous ETH high, low volume node. We get around this, then very likely we're going to go up some more. And that's never quite sure. Let's think about the trigger. So imagine that we had 138 stops come out right here. But we only got 3 out over here. But it didn't come back to test this area. So do you lean on this volume, microstructure, and go long off of here up? But that's a pretty, that you're talking 30.75. You got to get to 33.75, which is just under the high to get your scale. I think that's a pretty dicey deal. I'm a little bit conflicted about what to do there. And of course, if you get on there's a VPOC migration up. So that could well be a mechanical spot to do something. Lots of folks would be looking at that. I could take it, I guess. Mechanically entering those VPOC migrations is not generally considered a good idea. But in this case, there seems to be nothing but upside there. Put that marker in here. Oop, put that marker in here. What am I doing here? Is he thinking about whether to enter this trade or not? And I'm not being able. Deer in the headlights. Frozen. Yeah. A mechanical entry of the VPOC migration is not recommended. This is one of Tom's ideas, and you can see why. Now, perhaps test down here to the high, previous high on the VPOC migration. We got some absorption with the bomber coming in here. And this brings me right back to the conversation I was just having with myself about where do you enter this thing? On this low here, in this low volume area, very easily go either direction. Or do you lean on the high? Now, if you were leaning on that and got long, or the VPOC migration up, you're just on the verge of being stopped out. So, did they pull the VPOC up there just to sucker a bunch of people in with a head fake and get bitch slapped? And I should always preface my conversations for anybody else that would be listening. Obviously, I know my preference is short, so I struggle with all this, irrational exuberance to the upside. Tom has an old saying: the market goes down to go up and up to go down, which is pretty true. They've got to go down one way or the other to catch the stops and get the fuel and get the bullets, right? And then they can, once they've got a position on, they take it in their direction they want to, and then they sell it or liquidate that position out because retail's all excited about which way it's going. And suddenly they're the other way, and, that's how the market works. So we've tested up to that ETH low from below. We've got this POC up here. We've got the IB low right here. Yeah. A short would be counter trend, unless the assumption was that the context had changed. I'm not sure. I continually monitor, because I'm looking at both monitors at the same time. I'm continually watching this. And you see where we topped out, pulled back, came up, took out these swings, came up here to test those swings, and now we're looking lower. In my opinion, the context is starting to move to a lower configuration. But, am I convinced of that enough to put a trade on it at this point? No. That's a tough call. I'd love to short down to this mid and VWAP. Those aren't structured trades. It's normally the other way around. VWAP mid to POC, certainly not the other way. So, and what's likely to happen quickly is that those two things will move up. If the POC stays high, that means the trade will probably occur at that level or higher. Now long here would be tough. The scale at 27.5 would be pretty close. 27 would give you 3 points to the obstacle, which is the mean or POC. But then where are you going to go after that? They got to go for new highs. And they might have shot their wad, you know. Kind of surprising to me that they poked over this previous high. Oh, look at developing value area highs pulled way up here to the top again. And there's no excess above that. That's an unfinished auction, basically. That's the theory. That's part of the theory there, actually. Pretty surprising to me that they got up to that previous MC high and did not run into a whole bunch of stops or fuel up there. But I guess it's because a couple, 3 days of selling weeded a lot of them out, and it is Friday. So, will they bounce it off that IB high? That's a question. And I don't really have 3 points to short down to that. I barely have 3 points to get ahead of this obstacle. So I'm kind of caught between the devil and the deep blue sea if I want to stick to my guns, which I do. $10.18 already. Approaching 2 hours. Well, no, not approaching. We've just turned 2 hours and 3 minutes in the stream. 2 hours. $22 minutes. About 22 minutes to the bottom there. Or 12 minutes. I can't even do math there at this point. I'm really liking the thought of this short, but that's probably going to really hurt my feelings when it doesn't work out. It seems to me that the context has changed to down. And the thing I would need to get through is that IB high. I don't have room. Here, you see, it's 26.5. IB high is at 25. That's only a 1.5. So that's not scale ahead of the first obstacle. And I wasn't clever enough or whatever to catch it up here. Here, you know. That rigid rule on range probably cost me stuff, but it also, I think, in the long run, saves me. Now, there's 4 handles down to the mid, but you got to get through. You got this liquidity in your way, which is the first obstacle. So in reality, what do you got? Half a point. Point to the IB high. These are all, and you know, RMT. I shorted right here. You know, shorted this when it came up here and tested below it. All the stuff that people say when they're looking behind them in the rear view mirror, baby. such a pro. Tom likes to refer to, at the TLab, Tom likes to refer to indicators because they're all lagging indicators. It's like driving a Formula One looking in the rearview mirror. And that's a pretty good analogy. In the case of most internet trading gurus and whatever else, it's all RMT. Everything they do is narrating and looking in the rearview mirror, which anybody can do. I mean, I certainly can. I think my completely not interested in trading 16-year-old daughter can. She's, got a brain. Now, are we going to take this short in this consolidation at this low volume area right here, which is the previous last night's ETH high statistic, which was taken out, low volume area? Or are we going to rotate around that and go up? We had the VPOC migration higher at 89. We could get it to rotate down here in a couple thousand contracts, or 1,500 or so. That's a real quandary for me, what to do in these, what to lean on and what to look at as, outside edge and things like that in these markets that are just kind of a whole series of small distributions up or down, whichever way you want to look at it. What this looks to me like on the Ranko, which is kind of obvious in here, is this consolidation right here, which is building right here. And here we go into these ledges again. Been seeing a lot of those lately, and I'm going to have to Google it or something. I don't know what to do with that. I don't know whether that's a strong area or extremely weak. Would look like it's very weak to me. But that not be the case. So we're at 28 half. If you want to look at the IB high, there's 3-point scale, but we've got first obstacle here of liquidity, and then the next one down here, and then the IB. So there is not 3 points to the first obstacle, which is the previous RTH high and this liquidity that keeps flashing around down here. More than likely, that flashy crap is more than likely just an algo that'll jump out of the way so fast it'll make your heart bend if price trades down there. Now he's chasing it up, so he's trying to get that price up. Notice how these liquidities come up here and flashes red, then moves up again, was down here. Now he's got one here and here. Watch these move up. The liquidity is chasing up the market. So here we are messing around. I hope I haven't been talking to a muted mic for God knows how long. Basically, to recover, here's the previous high. We've extended the value area high up. POCs come up. It looks to me like, or by the basic definition, the traders are accepting higher prices. And now the full session VPOC has just migrated up. So the market is accepting higher prices. This might be an instance to take along that VPOC migration. I'm trying to determine here if there's more of acceptance around the full session or when the two align, for example. I have a real hard time taking a trade off the POC, as I have said a zillion times. It's diddling in the middle and being the fact that it is the most traded price. What do you expect is going to happen? They're going to go above it and below it, right? Look at the profile. It's smack dab in the center of the curve of the distribution. So there's down here, up here, down here, up here, down here, up here. Yeah, if it takes off and goes this way, you're a rock star. You're a genius. But I don't know about that. We don't know what to think about that. And that's, look at how many times that happened along here already and then fell back to here. I don't know what signals, other than the full session VWAP moving up there, that's kind of something that I think is valid. But what am I looking at? So I'm at 30. First obstacle is 32. I don't have my 3-point scale. So poof, off the table. Could be one of those real magically boring days. And now I'm going to try to remember to get all this damn muting stuff straightened out. I'll be so irritated if that was muted for a while. Anyway, be right back. Okay, what happened? Well, what a surprise. Nothing. Again, you see, the POC, the VPOC, and the full session VPOC, and boop, 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 boop. That's why it's the POC. It's the most traded price. And now it's the most traded price for both of them. And I guess I should throw another one of these guys right over here. It's kind of silly to do, but when you got a process, stick to it. It's kind of like flying a plane, No matter how many times you've flown that particular aircraft, you stick to the pre-flight and all of the various checklists. They're there for a reason, and that's why they were developed. Same way with this. It's a process. Stick with it. And, without the range to this, I would consider the first target, for sure the first obstacle. I'm not going to do anything. And on top of that, it's just, making retail soup over here. And we might just fall out of bed hard. But we haven't done that for some time. And there, again, is no structured trade that I'm aware of that would be POC, mid VWAP. There's the IB high, and you got to get past this liquidity to test that. If you're going to test if the IB continuation trade is still active, I can't say that I can see anything that would be a viable trade setup for me, especially disqualified by the range, risk reward, whatever you want to call it. And this liquidity right here, little teeny bitty liquidity microstructure. I mean, Tom gets pretty into weeds sometimes for that. I don't know. I think I need to look a little bit higher time for a little bit more structured trade than that. Is this going to be the break? Point out that this is pulled back smack to this consolidation right here, right? This microstructure, this one. That's one of the things about Bookmap. You can find yourself in pretty close, pretty quick. Why I keep that Rinko. Now we're heading into a real low volume area here at the previous RTH high. We've got the IB high and then the VWAP below it. 26, 23. So just 3 points. Now I've screwed myself by not getting on that quick enough. So that's an execution error on my part, essentially, recognizing that we're in an area where we could get back down here and not taking it with just barely enough range to the mid and the VWAP. Well, and that would have been real close to a no, it wouldn't be. It would not have been. Up here would have been okay, would have been scaled, risk neutral scale, but now no. And there's real standard retail to bounce the IB high, the VWAP or the mid when approached from above. And in this case, they're sitting on top of each other. So I guess it's a double whammy. And now we're testing the IB high from below. Does that mean we're going to now revert to an IB down, IB failure kind of situation and take it lower? Don't know. But that's an over-under spot for sure. $25, the first obstacle would be 23, so not a deal, right? 26 to 23 halves, 2.5 points. That's not a deal. The deal would have been my original notice or observation here, but that's just a little dribble of liquidity and not really any kind of a level or any kind of a spot to hang your hat, actually. So, I can think of a million rationalizations for why I should or should not have taken it. That's the unfortunate part of humans. I think that's why people lean, or at least try to lean, towards algorithmic trading is takes the human business out of the spur of the moment decision making. The problem with it is that's you got to have one hell of a program coded up to take in all the nuances just that I recognize myself and articulate here in the narration. that would be pretty crazy. Out of my league, I believe. I don't understand that. What he's got there. Yeah. So the IB high seems to be, and with the mid and VWAP just below it, seems to be holding their own. Test up here could have been something to watch, but where's the trigger? There isn't one, I guess, that I see. And the scale is too close. Maybe I need to rethink the parameters of the risk neutral setup. 3-point or 12 tick stop and first scale. The problem with that is you got to also consider the harmonic rotations or the actual range of the rotations of the instrument you're trading. If you put your stops and stuff inside that rotation, you're just going to spend all your time getting stopped out. And that's a lot of fun. Not so much. Yeah. This is kind of, again, a pain in the butt because the IB high is just 2 points, 2.25 to mid and VWAP. So, there's not any opportunity to for a scale, risk neutral scale there. And everybody knows that mid and VWAP generally bounce when approached from above or from either direction. They generally bounce in the direction they were coming from to the direction they were coming from. May not hold. You might not know how many times, but well, here's one time. There's 2 times. There's kind of 3 times. Is it going to finally base out on this IB high and reject down through these guys? Or is it going to go, nah, it's an IB continuation. Let's go on. Let's go up and check the VPOC. Let's do a price check at aisle 3. Let's run up there and check that 30 level. Let's see. The joy of trading, you don't know. One thing is certain, the price is going to go up or down. That's about it. And should we get through the VPOC, VWAP, and mid, look at all this noise we've got down here to get anywhere, scale-wise, Hmm. If there was some range there, I would say it looks to me like it's the IB high is going to fail and they're going to head back down. But there's nothing, point and a half or less. More or less from these tops to here to the first obstacle. Frustrating. And now the mid VWAP bounce. Where's that going to go? Still just 25 to 24. Still only 2 points. Even if it breaks down out of the IB high, you only got 2 points below. Now, will they base it and go up for the price check at L3? That's got better opportunity for scale, but less likelihood for me that that's the direction they're going to go. based on the context. Anytime they consolidate and flop right around that IB like that, that's pretty dicey situation to me. And especially complicated for me because I prefer to short, as I said. So, my natural tendency is to be looking for what I would consider to be a short, like here. But there's nothing here. And then you got this, then you got that, then you got this. And that's just 4 points. That's 3 points. All of this noise is happening within 3 points. 3.5. Ridiculous. And it's Friday. And it might just be a really good day to make it happen. Go for a walk. Whatever. Something else. Kind of disappointing to not put one in the sack before you roll up the shutters, but we're coming up on 11 o'clock before too long here. Not that that's any magical time, but yeah, I yeah. Anyway, and here they are back at the IB low again. As long as that, well, it's never going to change anytime soon. The mid and the VWAP being so close below that IB high, just above settlement, that's like we don't want to go anywhere today. Ville. We're happy with it for the last Friday of the month. Window dressing or whatever they call all that noise. That used to be the stock stuff. They would trade it up and do all this kind of stuff to it. Other people would call it manipulation, but if you're an insider, I guess you have euphemistic terms for it that people accept. There's Mr. Flashy Boy again, flashing over here like crazy. Do we have room for 26 to 30? Yeah, we do. But where's it going to go? Is it going to get up there and then fall on its head like a minute ago? Likely. I'd love to say I knew how to. I guess I could have considered these tests to be, a good entry point on an IB continuation back up again. But I don't think there's anybody that would argue that there is a bunch of fuel in the form of stops living just behind all these tests. Every time one of these guys goes wrong, they put their stop right down. That's an awful lot of fuel. And notice that there's a whole lot of liquidity piled up right down here now. So that would make a long off of there hard for me. That would make a long hard for me at that point. And taking a short here in the middle of outer space is also not a rosy, a warm and fuzzy feeling. And having said all of that stuff about the fuel and how that's not didn't strike me as being a sound location for a long. It's 5 points. So what do I know? And I suppose somehow or another you could interpret that as mean reversion, depending on how you look at it. Prices reverting to the mean. I'd love to know, I would love to know the really truth behind the market. There's a real successful YouTube, Twitter, Instagram, whatever guy swears up and down. There's an algorithm that controls price movement, and he knows what that algorithm is. And, who the hell knows? Maybe he's right. In this day and age, it's not so far fetched to believe that there is, I can't really believe that this is driven and all this action is participants looking for value for what is a fair price. I mean, really, how long are they holding it for? 20 seconds? What's the fair price got to do with that? I think the market and the market movement is 99.8%, like Sigma 6 speculators and traders. That's what I think. I mean, I don't think that anybody, the algos, sure as hell not interested in the value. Or what the value of the S&P, because nobody's holding it for more than a few minutes, most of them. And that's a long trade, long time frame, long duration for a trade, to say that specifically. So I kind of have a problem accepting the fact that it's based the movement of the market is participants looking for value. I'm thinking this might be an opportunity to, well, we're awful close to POC. I was going to say short. We've tested this area here, which is whatever that was, a couple of times. We would have the previous open IBI and the VWAP and things down here, terribly close to the POC, which again has fuel. And if they get above it now, after all of this trade lower, probably a lot of stops living up here, and they could get a run higher. Yeah, so I don't really hold with the idea that trading and the market movement is because of participants determining the value of the instrument. I don't think anybody gives a crap what the value of the ES is at this point. What they care about is where can they get, which way is it going? Where can they get in and where can they get out? How much profit can they get out of the middle? And I don't see where that has anything to do with value. Nobody's holding it for past, higher time frame people that are investing in the market, and the futures market is, as I understand it, basically the hedge market. Right? So they're invested in stocks, but they're hedging their bets on those positions in the futures market, and like options. Options they hedge with futures. So I don't think that really has much to do with identifying the value of the S&Ps. In this time frame, in this intraday, pretty much micro, looking at minutes here, looking at, these divisions are 2 minutes, right? So the Renko doesn't have time on it. And this isn't really based on time either, but at least you get some reference of where you are with those things and where you are with with respect to the open and the close, at least. It's not lunchtime, and some of those times different things happen. London close and whatnot. Yeah. Big consolidation again here now. A zipper, to quote the famous Rod, FT71. They do look just like a zipper, I gotta admit. Right. Consolidation, zipper, consolidation, zipper, consolidation, back at the same exact point. You know, what are they doing? Tell me how that's finding value of the S&P. Here we go. This big liquidity that's fallen in down here seems to be pretty serious. They're looking for something. Typically, the thinking is that price will trade down into that liquidity. You know, A, that it's really liquidity. B, when might that happen? C, who dreamed that one out? And is this just algos and people spoofing to get price lower so they can get on longs? I mean, you know, a zillion different thoughts around that. Yeah, this is pretty much sucks. I don't really have any range. I didn't get on any place. I suppose this was a take down here. This was a trade location, but just doesn't seem even remotely rational to me with all the liquidity that would be living down here in stops and this big pile of nonsense down below here. Or at least it wasn't so bad over here, but now that seems like a pretty risky long. It is more or less in the direction of context, I guess, overall context, kind of above the IB high. Not when it was here, however. So it still supporting the IB continuation. And here we have something. Do you take this breakout? Think they're looking for higher? Well, there's 30, and if they take it all the way to a new high, it's 34. So you've got a scale and a point. Don't think so. RMT, you know, there's beautiful opportunities early on. Test of that IB low and all the way across. And that may be the idea. Is just would you see those kinds of asymmetrical trade setups, just hit into them and say adios. The problem I'm trying to stick with is the statistically proven percentage of edge around a structured trade, and then allow large numbers manifesting a profit. And I certainly don't have any structured trade, vetted or not, POC out. The only one that's even remotely close would be the POC migration. When I'm sleepy, I need to get a coffee, so I'll be right back. Well, so now it doesn't look like I missed a hell of a lot there. Yeah, it's just this is not a market that I'm interested in participating in. I don't see the range I have for any scale and my criteria. And based on that, I will be a tourist. There. Always do kind of wonder what they're up to. And a more interesting question than what are they up to for me is who are they? You know, that's the presumption that there's some controlling force or group somewhere that I guess, and granted, I've never traded on a big professional desk. So maybe they do control things much more than our level and my level understands. I did have a course or, in some dialogue with Jim Dalton, the markets and profile. And he suppose his story is that Peter Stottlemyre developed market profile and brought in the charts and stuff to Jim's desk, who was at that time head of the CBOT. And Jim says he immediately recognized the value of that and gave Stottlemyre a check for $10,000 to continue his book and his work. I suppose there's probably a lot of poetic license involved in that story, I suspect. But interesting story. Anyway, he did definitely start trading and headed up trading at the CBOT and other professional trading desks, and made a comment one time that he doesn't ever pay attention to the other markets except for the used to call it the cash, which is now what we call the regular trading session. At one point, they passed the book from one office to the next around the world following the clock, and it was just insignificant difference compared to not worth the trouble. So that would suggest that there's some manipulation, that they do move markets and manipulate, they wouldn't call it that, but price and take price to where they want it to go and things like that. I don't, think there's any algorithm that's particularly tuned into my computer to see where I put my stops. But on the other hand, retail traders, historically or habitually do certain things, put their stops at under or over certain levels, and I think that those probably definitely are targeted. But hey, it's Tom's quote: "Think like a retail trader, don't act like one." It does surprise me though that there's not any particular stop pops up here. I don't know what to make of that. This market looks like it's just a flipping dud with all these little areas of tight consolidation. Granted, that is 50 points, but there's can't seem to get it up to 25. Why not? There you go. So there's wound out to every tick. That's pretty wide to see anything, I guess. I'm not sure that makes any sense for me. That's spread out to the tick level. Maybe I can narrow that down a bit. Should be able to get it closed down to where it's not ridiculous. Like that. Look how close that is, you know. What are you looking at there? This entire chart is just right here. This little bit of trade right there. I'm not sure that helps me a lot. You know? I think I might be better off having a little bit better. I'm not getting it's only 50 cents now, but I got a little more perspective of where we've been for me. Back to the Jim Dalton stories. He vehemently opposed the use of any kind of tool like Bookmap or a dome. He said that causes cognitive dissonance. You get so much information and so much minutia that it's ridiculous. He, trades with market. At that point, didn't even like volume profile. He traded market profile, and which is our 30-minute brackets, right? Yeah, he's said, "Oh, that's the kiss of death for a trader that starts trading in minutia, 1-minute charts or something like Bookmap here or a dome." So, like I said, consider the source. What are you gonna do? I don't know. I don't know here. My initial thought would be short, and that's 27 to 24. But the obstacle would probably be the IB high. So that's too close for me. And this is the POC, so I'm kind of screwed here. The VWAP and the mid are spreading out a little bit, so that's good, I guess. And yeah, and there it came right down to that IB high and bounced a Rooney. Might continue on, but that reinforces my decision that there wasn't enough room for the scale, and or even the trade, even from 27 to 24 is half is your right down there on the VWAP is your risk neutral scale, and it could well go there. There's no question about it. But what's that trade from from POC to outer space still and somewhere else still? And I think that's grasping for reasons to trade, and maybe that's my problem. Maybe I should just be more cavalier about putting on risk, and that's in my view gunslinging, and that's not conducive to a longevitous career, which is what I need to have here. I mean, that's my goal. I'm not. If I wanted to play a video game, I think there's probably others that are more fun. I guess I've never played a video game, video game. I guess there. But if I hear my daughter laughing and squealing, that's any indication. I'd say they're lots of fun. She's a smart gal, and so Brings her lots of real good enjoyment. And here we are. Bounced off the IBI, back up here. Frustrating day, but hey, that's the magic of trading, you know. And the sooner I realized that, the better off I was. Cannot predict, have to anticipate, and run trading as a statistical business. That's, in my opinion, the only way to succeed. Identify structured trades, capture the data required to have a statistically significant data set and determine whether those setups under those specific criteria have a statistical positive edge. And if they do, then you take every damn one of them that presents itself. And the law of big numbers will manifest that edge into your bank account. The analogy, of course, is at casinos. They know exactly the percentage edge for 21 with the specific, very specific rules, and they don't vary from them one teensy weensy bit. And it's pretty obvious who's making the money, the casino or the gamblers, you know. And it's not any big secret. It's gaming theory, but it's statistical. It's statistics and the law of big numbers. So that's all there is to it. If you have something, in this our case, a structured trade with a statistically verified positive edge, whatever that percentage is, 15%, 10%, whatever. You take every instance. The goal then is to take every instance of that setup specific with the specific rules and manifest that percentage over the greatest sample size. And that turns into the law of big numbers. And boom. You're building the sphere, baby. The sphere in Las Vegas or whatever that's called. God, I don't remember when I drove through there the last time. That Las Vegas must have been. Wow, I don't remember. 30 years ago or something. More, probably. But yeah, any place, we've lived for many years in Kuala Lumpur. There are casinos there. There at Genting Islands. Singapore, of course, been there many times. Thailand. All you got to do is look around and you can see who's making money in any casino place I've ever been. I suppose there could be one somewhere that doesn't make money, but that'd be pretty amazing. And that IB high certainly brought that little down draft to a halt and back up towards the VPOC. So technically there was range from here, say 25 half to 28 half. there's the IB scale. I mean, there's the risk neutral scale, and anything you get above that then would be profit. And if it comes back on your face, the worst you got's a scratch. It looks like they're going to take it higher, I guess. Hard to quickly recognize and anticipate changes in context. In this case, no. Here's the day in Orenco. Pretty much a Dow day to here, IB low. Before that, IB was set, so this is just barely the IB 30. And up we go. Again, no IB here. Oh, yes. The IB stat was taken right there. That's at 932. And then we've been pretty much trading above it the entire time. The volume point of control migrated up. That's the yellow guy here. And we've tested this value area IB high a couple of times and back up to the POC. So I guess that's the trade I should be watching for. I can pull back and continuation up. I just haven't recognized it properly, I guess. And there is just barely the range, as I just pointed out. Being ever mindful, of course, anytime that you would try to take a long down here, you've got VWAP and mid just below a couple of points, and you know there's stops piled up down there. Never mind the pile of liquidity hanging out down here. Those are all things that contribute to my analysis paralysis these days. And it's worth noting that the entire day's range so far is about 22 handles. The isn't exactly ripping and tearing. And ironically, the NQ is not doing a hell of a lot better. That thing is usually, people refer to it as dancing with the snake. I actually traded the NQ for years before we moved back over here. And the market complexion has changed a lot. There was a time when everybody dreaded the summer trading hours. It was, ES was like, you had to drive stakes to watch it move. stuff like that. It's quite a different market now. I more or less switched to the ES because it was more liquid and a little more disciplined on its moves. You know, if you like the ES, the NQ, there was a level here you were looking at, it'd probably slide by it or overrun it by who knows how much before it would come back there. It was hard to do that. I was okay after a while, and the ES looked to me like a more dependable and it's much more liquid. So that helps a lot when you're getting into or out of a position. And then also, the TLab and those guys are all trading ES. There's a couple in there that trade the NQ, but most of the conversation and all Tom's stuff is around the ES. I traded crude a long time ago too, but I haven't looked at that for a long time. I think the more wild and snaky they get, the more appeal they have to the gunslinger types. And then, and also that would require, switching instruments would require me to start all over with the vetting story, which, collecting the statistics around each one of identify the setups, collect the statistics around the setups, and then all of that stuff. I'm still struggling to get that done where I am confident here. And also, and identifying those rules so that you don't. We'll just be whipping and spurring. Looks like somebody woke up. It must be coming to something here, coming up to the bottom of the 11 o'clock hour. Not that that means anything, but looks like somebody was hungry and they wanted to get some. They wanted to get some stuff. I would suppose that this run here has got to do with a lot of these stops. People, oh boy, we're going long. To the moon, Alice. Interesting to see now if they get back down here in the IB high holds again. I would be, let's see, where are we? 25, 30. I would be tempted. I will be watching closely to see if this tests for another one of these rotations. But I, as I mentioned earlier, very, very, very leery with the VWAP mid and that giant pool of liquidity just laying below there. That's got to be pretty tempting. And of course, they're not getting it down that couple of more handles to where there's this proper scale ahead of the VPOC. Also calls to my mind a situation where how many times can you drink from the well, right? So we've bobbed around this value area high about this bunch of times for this consolidation, back here for a couple more, and back down here again. How many times is that going to work? And here's when we set the IB high, or the stat anyway. And while I was busy jabbering, they brought it down here where that right to the IB high, where they're the most opportune entry for a long, and probably the most asymmetrical position to try to put on. Just put a stop above the VWAP, a tick or two below this point right here. Considering here's 138 stops out around here and 37 here. Is that exhaustion? I don't know. But now we're at 27 to 29.5. We've got to go all the way up to 30 in order to get the risk neutral scale. And now they're going to come down and look at the VWAP in the mid, I guess. The further the day progresses, or the later it gets in the day, the more suspicious I become about these kinds of levels and things, and also reverts back to how many times can you drink from the well? As a result, I would not be inclined to put a trade on right here, long or short. Short because, yes, I do think there's a lot of stops down here, but typical retail behavior is to bounce the mid, which is here, or the VWAP when approached from above. So that's not a good thing if you're long, if you're short, right? And here we are, just keep bebopping around on the IB high. The settlement, VWAP. Developing value area low is not too far below, actually, just 4 handles. That's kind of interesting. And there goes the VWAP and the mid. And I guess couldn't resist the temptation to go see what this liquidity down, all this liquidity down here is about, I guess. And here's that bounce for the mid. How far it goes, who the hell knows? Okay. Developing value area low time. Is that what it is? And now we're in a position where we have a structured trade being the mid / VWAP, VWAP POC. that is, and there's plenty of range for that trade. I'm not saying that's the way it's going to go now, because it looks like context is now changing and heading down. So, oh, look at that volume disappear, or the liquidity disappear down there at 20 and 19. They were pretty big shots until that happened. Lovely short now. So far, about 5 handles. But that's gambling, as in my view. Or, calling a reversal or whatever you want to say. And I'm sure there'll be plenty of people say, oh, I saw the reversal and I took this short at blah, blah, blah. And I have said a number of times that I'm not going to trade off the POC unless it's that one migration trade. This was not an instance for me to go long because of the VWAP and mid, and that's why I didn't participate here. But we had tested this several times, and I wasn't confident we'd break it. Now we have. We're down to the value area high from yesterday. And will they get it to stick there? That's a really big question. There's an awful lot of liquidity in the market, or there was. And if they started making a run down here, these guys turned tail and skedaddled. Looks to me like. And here's that typical retail behavior from the downside on the mid. Approach the mid from below, and they sell it. Similarly here. Test it, boom, test it, boom, test it, boom, test it, boom. But not enough boom. Only 3 points to the value area high from yesterday, and this liquidity. Now, if they can't stick the price, it's not accepted in value. It's highly expected, or the very high probability that we're going to trade back up. Ooh, and there's some absorption. How do you figure that, How do you figure on that? I've noticed that very frequently those absorption runs, price will come right back up to the scene of the crime there. Let's see what happens here. About 21.5. That liquidity pulled out, and what little bit was there got traded. 1,125 iceberg longs went off, 456, so that's about 1,600, 1,700 contracts traded long. That means they were taken out. No, it doesn't mean that at all. It means I don't know. I was going to say something incorrect. And, pretty quick, we're going to be down at the bottom here, and it's going to be mean reversion up. And what a lovely short to be on, but okay. I suppose this test of the mid will be highly proclaimed by many to be the trigger for that short. That is settlement, and I think current mid settlement, and value developing value area low is right there. No, the hell out of me. I'm getting to the point kind of down here though where a reversion back to that mid VWAP and potentially VPOC is not out of the question. See, what we've basically done here is opening swing high, low, then traded down, all the way up, all the way back down. Rotational day. And you could almost bet a cup of coffee on the fact that we're going to probably end the day right about there at the open, right exactly where we started. Which brings me back to my concept of, are they really looking for value? What the value of an S&P is worth? And I believe that it's speculators and traders trying to pick each other's pockets at all different time frames, which is fine. But I'm not really sure that this has to do with the value of the S&P. And why now suddenly, after being up for, why is this suddenly now dropping off and looking very closely at another neutral day, which is goddamn, how many of those in a row we had? A couple, I think. A neutral day being the IB high and the IB low are both taken out within a day. At a 23% chance of that happening. Okay, it's 16, and look at all that liquidity up above there now. If I took this long, what would I be targeting? I've got a couple of points to the first obstacle, so that doesn't qualify. Need to have at least 3 points to the first obstacle, which is this liquidity, and that's not doable. Well, just barely doable from here, right at the bottom. I'm not that good at that. And that's also an asymmetric trade location. Getting pretty close to a mean reversion story down here. Now they kind of moved out. Maybe too high now. Yeah. See that asymmetric trade location was down here at 14. Now it is risk. Now it would be a risk neutral scale. And so the worst that you could do is scratch. And the best you could do is think you're a flipping genius for getting right in off the bottom. Would be very tempting to have, if I were quicker, I would have taken that down, test, and up, and then buyers come in. Is that what happened, really? Well, we had 157 out here, but I don't see any in here, but I guess that's even more sign of exhaustion. And then, but not really any buyers either, so, piece of hell out of me. And the liquidity shows its ugly face back up here at 18.5, putting the lid on the pot and pushing them down lower. Yes. I'm going to take the whole thing out. As I have said previously here, we've had several days in a row with neutral days, which, they only got to get a handful of ticks or points in there. That's what they've got. Another one. Just like the other one. I'd love to take the rotation back up, though, to mid VWAP and the POC for that outside in thing, but got this microstructure here and here. The missed boat was here. Or unless they come back down here and, exhaust again. Don't know. With that liquidity there at 18, got to get down past 15 in order to make that a viable long possibility. And that means you're going to go for a mean reversion asymmetric trade back up around here. And not to forget, this is the full session. So the ETH low is way down here at 99. And the previous regular trading session low is down here. And that's, taken out frequently. Value area low is at 55. So it's not out of the scope of reality at all that this thing sells off hard. It looks like that may be what they're thinking about doing. Test up to the developing value area low, and they didn't get very far. It's right here. So this liquidity right in here, tested it once, tested it twice, kind of tested it a third time. Are they going to sell it off? That I don't know. My instinct to be short is preventing me from taking a mean reversion long here. And we're coming up on 12 too, which is another. They get up to all kind of shenanigans during the lunch hour. And every time I decide, to hell with it, I'm going to go take a nap or whatever and have lunch and relax and come back. And then, all hell broke loose and they went 40 points one direction or the other. That seems to be every time I leave, something happens. And every time I stand here for 6-8 hours, it's just not great. I hope I'm not being overly restrictive with those rules, but the rules are the rules, right? So there's 15 to 18 and a half. If I got in right here along, I would just be scaled ahead of this first obstacle long. And, what they say about picking bottoms, if you pick bottoms, you get sticky fingers or something like that. Picking bottoms and tops, you get sticky fingers. Or however it goes, sticky or stinky, I'm not sure what. Some saying like that. Use your imagination, I guess. Yeah. And I would suppose there are folks who have grabbed this one here and traded it up and grabbed this one here and traded it down. And I really admire that. I just don't seem to be positioned on the outside edges to take advantage of those to where I'm, scaled, risk neutral, and then moving out my targets and trailing my stop, trade managing the thing for those big swings. And I think that's the secret to being a more successful trader in this time frame. I mean, the big guys, Renaissance and Bridgewater and those guys, they're talking year time frame, year lookouts and stuff like that. So there's 17 to 19. That's just two. That's boo-hoo. Not good. Not good. NQ is putting the zipper exactly at the developing value area low. This is the NQ, and that's the value area low. Yeah. There's El Zipperundo right there. And they keep throwing that liquidity on there to put the lid on the pot and push this thing lower. I mean, you get down below that that IB low, and I suspect there's a whole bunch of stops, and looks like there's a bunch of liquidity building up down here. So lower looks wonderful, but I'm on the wrong end of the stick. It would have looked even more wonderful if I was short from the POC, I guess. Or, maybe I need to get over that. Maybe. So we have really seen a bunch of movement, but no real vetted trades or opportunities that I see from my side, from my trade plan. There's, a number of different times, but the risk neutral scale was not available in the risk reward. There wasn't enough range, is I guess the shortest way to say that. And now we're just got there. Didn't take it out yet. And if I'm not mistaken, neutral day, you got to get through it. And I'm sure they're going to do that now. And probably hit those stops down below and a whole bunch of crap. And then, I could probably throw a short on here. There would not, it was 14 to 12. 50, that's a 1.5, certainly not the risk reward. And then there you go, through the IB low, neutral day, and the stops below. Yeah. But is that, there they go. Big bunch of them down there. Big bunch of stops hit right there. And what do we got? We got targets below, right? We got value area low and the overnight low below us. So if I could have seen a way for myself to get on that, I would be extremely happy. And I'll have to look back at this thing when I'm not. Maybe I focus in too much on the immediate trade. I'd beat the hell out of me what I do. But it doesn't seem like I take very many trades considering the movement of the market. And a little hard for me to believe that all of those points where a setup trade would occur wouldn't have the range required. But it seems to have been the case this morning. But now what do we got? We got any kind of long going here? Yeah, sure, maybe. But that's just, bottom pegging. And there's a lot of people have a pretty unsuccessful career calling tops and bottoms, I think. That's the hardest part of the mean reversion, of course, is picking the outside edge, which is essentially, you're essentially picking at the top or bottom. I'm suspicious to go long here because of the extremely low volume just above and the pile of liquidity just below and a target or two. But more importantly, the pile of liquidity, which they will probably trade into and probably are going to here in the next couple of seconds. So what to say? What are they going to do? What to say? What to do? Don't know. There's 699 stops went out. 18 just back to this level area. But that's the low of the day. And look at all this liquidity down here. And, you know, everybody, I think, I don't know of many people that argue that people that were trying to get long are throwing their stops under the low of the day, myself included. If I'm thinking about a long, my stop's going to automatically be down here. Well, so logically, then where would some whiz bang high time frame guy go looking for stops? He's been selling. These guys are buying to go long. Somebody's been selling to them. They're putting their stops down here, and for him to make money, whoever that somebody is, they got to bring the price down to those stops and buy them back. That's how it works. Yeah, some kind of down day though. I'm just I don't think they're I don't think they're finished with down yet, and that could just be a prejudice on my part. But with all of this liquidity down here, and reflecting the stops of all these people that are so excited to pick the bottom and trade it back up, and maybe I should have been one of them. You know, there's 13 points. There's a risk neutral trade right there from the bottoms here. And there we are at the mid liquidity. And now there's a bad spot, even to go long, I think. But I don't know how you get on a mean reversion other than just do it. What happens when they test this IB low? It's clear sailing above, obstacle wise, but I'm not so sure that this is got long material written on it. So anyway, three minutes to the top of the hour here, whatever that means. I have no clue. Seems like a lot of liquidity down there and not enough scale to short down to it. The thinking is more than likely to go mean reversion from the bottom, rotational, because we have been basically rotational, just widening it out. It is a neutral day now, very definitely. And yeah, I don't know what to think about it, to be honest with you. I think it's probably best to, in that, if I don't have a clear idea of a trade, which the only sort of structured trade that is around is the IB low or IB failure. Even though the IB low was just taken out for a neutral day, there's nothing else. Or or the bottom of the range for a mean reversion. That's about all I know here, I think. There's in 13 to 1850 to the first obstacle, basically. There were some buyers that didn't get too far. Kind of interesting. $2,427 contracts were absorbed right there. Wow. That's a lot. And flop down we go. I'm pretty glad I didn't convince myself to take the IB failure. I do think there's going to be a trade come out of here, but I'm not, it should be pretty obvious with this conversation that I'm not clear what it would be. The only trade that I would really imagine that I would have remotely structural from down here is mean reversion off the lows, with assuming that this is representing a change in context. And it may not. I mean, yesterday's low was 20 points below here. So they've tested higher, and maybe they're going to now see what they find below. So here's the overnight low, and here's yesterday's low. And this is the previous Globex low. But value area low, RTH low, or ETH low, which is frequently taken out, and the previous RTH low. Statistic numbers are based on the lower in range opening time. For me, calling a bottom, which is taking that asymmetrical trade down here on the bottom, it's about the same thing as diddling in the middle. That's just, picking bottoms and tops. It's something I've always been taught and considered to be retail fool's folly. And, some genius some days you hit it. Some guy, yesterday in the Traders Lab, I'm considering this a mean reversion trade and not a counter trend trade. And he took it right basically off the bottom, and it worked out just magical for him. So good for him. This doesn't look convincing. They're convincing. There's not a lot of buyers up here. Getting to that level at mid, above the high below, and kind of freezing up, consolidating. And what are they going to do now? And I'm beginning to be of the mind to just not worry about this and wind it up for a Friday. Now I don't know. This was probably kind of a low, high below failure. I think, I don't know how to read that or think about it, and pretty obviously it wasn't. It's going to go somewhere here for too long. I would have to imagine, just looking at the number of times they've tested this bottom, it's pretty weak, and that these liquidity and targets down here are going to probably get taken out. But in the meantime, it could go zooming up to that mid and VPOC, or at least the developing value area low, quicker than you can say don't. And this 12 o'clock level was Slayer level, whatever, is always magical. Always magical. Where'd it go? Always magical. So that IB low is becoming popular. Yeah, it's pretty much stupid. Look at this 7,900. What's the guy? Where's the POC living? 22,000. Oh, that's a good example of why the market, why the POC moves radically at first, and then how it changes. 22,000. The next level around here is 11,000 contract compared to in the morning when it starts out. It's 200 is moving the needle. So I think they're going to trade it around here and get a bunch of retail soup one way or the other, and then break it. My initial reaction is to think they're going to take it down to that liquidity and the spots below. But we've got the mid and VWAP and POC and all kinds of crap up above. So who knows? Who really knows? And I'm desperately trying to figure it out. It doesn't help. It is what it is, and just read it. If it looks like something's changing, go with it. Liquidity's come in just above the IB low. I think any reasonable person would imagine that they're going to take the lows out. They're very weak, been hit 1, 2, 3, 4, 5, 5, 6 times. And below them is a substantial liquidity pool down here. And there's a couple targets, normal targets down there. Value area low and overnight low and the previous day's low. So there's stops under all that stuff, which is fuel for the market, which these high time frame guys are okay. Fuel junkies, baby. I was getting tempted to take a long here, but I don't know if anybody's interested in looking higher, but me. Yeah, there is range to the scale and to the targets, and there's a buttload of targets above, but there is also this line in the sand right here, and a lot of stops down here, and there you go. There you have it. I guess the smart move would have been one of these tests down low, but that just seems counterintuitive to me with all the stops just below it. And the general context that the market at that point was down. I don't know. Now it's going long at the top, of the rotation. So that's no good. No, I need to be right back though, for I'm asleep at the wheel there. And of course, I go fill up my water bottle, and what's happening here now? Yeah, really nothing. Do, 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 do. One thing to notice is that we're just now testing up to that previous overnight VPOC and the naked point of control from yesterday. Why those are lines that anybody would give two hoots about at this point. But, you know, everybody's busy looking at everything they can find. And since I don't have a 8 gazillion indicators flying around every place, I have only VWAP, mid, and the two POCs. And this blue boy here, which is a the correlated market, being the NQ. And you can see that they're just about lockstep. Okay. Yeah, this is Chop Fest. I refer to this as retail soup. They're just chopping up everybody. And I'd like to not be part of that cuisine if I can avoid it. I would like to get a trade off here and a mean reversion trade back up to the mid, VWAP, POC, blah, 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 blah. That would just be lovely. The problem I have, which I have articulated ad nauseum here, is that we have gone neutral and we've got the liquidity pool down here and targets below, overnight low, previous low, area low. So it's not out of the question that we're going to take this thing lower, nor is it that we're going to take it higher and take out some of these targets. That's the whole. Funny how you change the scale on this chart and it looks like the correlation, which was just over top, but laying on top. Yeah, that's something I got to remember. That's I have to remember that this only has to do with with movement, and you see that it is exactly correlated. at the moment. But where it lies in relationship to this doesn't have any meaning. Yeah, I mean, I just pointed out a second ago when this thing was scaled differently, they were right on top of each other, and here they are. Not so much now. I'll be quite surprised and probably try to stay awake long enough to watch this happen. If we don't go down and touch it, get into this liquidity. These targets below, don't know. But I'll be pretty surprised at this weak low and all these touches down here. We don't break into that liquidity. Which would, of course, mean that these pullbacks up here would have been nice spots to get on. This is just barely risk neutral scale right there, 3 points. But the requirement about the important requirement is you have to be in the trade. $12.20. There's a 12-to-1 stat, which I never can remember what that is. There are parameters around it. I don't think we qualify today. It's something to do with extending the range during the 12-to-1. You have a high probability of doing something else. Obviously there's a lot of structured trades. You have to pick out the ones that resonate and identify one or two and focus on capturing the statistics required to determine if or if not they have a positive edge. That's that. So 11 to 14, there would have been an entry and a positive scale up, right? Or a risk neutral scale up. At some point in time, this stupid thing's going to do something, and I'm going to probably be here all groggy and talky and miss the whole damn thing. Like now, for example. Developing value area low right here is something to remember. Don't really have any strong buyers. Doesn't look like. That's a little bitty things there. Oh, well, that's pretty funny. Where the hell did that come from? Developing value area low. If they're accepted back into value for the day, then that says something about the perception of the traders and the value of the price or value of the instrument. And value area could be a complete misnomer. It's just 70% of the distribution. So I guess it's one standard deviation either side of the mean. Yeah, I mean, really, you know, and somebody decided they'd call it value. Who the hell knows? Not getting anywhere now. That's pretty for sure. This one's not really a qualified long because of this obstacle right here. If you're looking at this one, you'd be okay. I'd like to take a long off of this developing value area low and see where it goes, but pretty poor trade placement. Obviously down here, the mean reversion area, better. This is breakouty, and it's a short range to the obstacle. So, boop, tilt. None of them working. And you know, in hindsight, every genius took this trade down here. But go look at this and tell me what's different about this one or this one or this one. You know? Why is it this one that goes up there? I mean, in theory, they wouldn't have been stopped, I guess, but see my point. See my point. I would like to get on along ahead of that liquidity and the MEAD and the VWAP and all that stuff, but the range isn't there ahead of the obstacle. So rules are rules, I guess. Unfortunately, missed the boat down here. and then the bomber comes in and says, "No, you didn't. Come back on the boat. Boats come back for you." And what does that mean? That it's going to head down? Or that somebody just took out a bunch of stops? Yeah. To hear some outside noise, I'll go on the this thing here. Well, it seems like they're not too excited about letting that thing back into value. Just looking at it. Now we go back into a consolidation, big version of a zipper. But in this case, it's the swings are getting more compact. See, it's lower highs, higher lows. That would suggest to me that this is like winding up a spring. And one of these minutes, this thing's going to blow. And I'm probably not going to be able to grab a hold of it because I'm just pretty groggy internet right now. I'm just looking at this liquidity here. It's been in the damn market since about 10 o'clock when we had the first substantial VPOC migration up, and it's staying in there. So that's kind of interesting. Oh, this thing gets a little rambunctious here once in a while. Yeah, so this liquidity has faded out a little bit, but come back in here again. Again at the developing value area high. Yeah. One of these times I'm imagining it's going to blow through there and head for higher ground, but I only have so many more years to live, so you never know. They keep rejecting out of value, which is not brilliant. Not a good sign for higher ground anyway. Interpreted as a statement by the participants that the value area is too high. In other words, they don't agree that that's the value for the instrument. Again, I don't know who the hell made up the word value. Who named it the value area? It's 70%. It's a histogram. I mean, basically, obviously, look at this. It's all these volume profiles are is a histogram, and the volume profile and the value area is 70% of that histogram of that profile. So it's I'd have to look at it, but I think it's actually 67 point something percent accurately, and it's like one standard deviation either side of the mean. That's what I believe is the case. I'll have to look at that maybe weekend or sometime when I'm in the mood. I mean, everybody calls it the value area. So, and they also, it's generally agreed also that when there's a trend day, value area is not valid because there is, quote unquote, no value price. It's price discovery. The participants are looking for value. So it's a price discovery trade day or price discovery trade action. No. Interpret that as you will. Well, somebody snuck a little liquidity down there at 18 or whatever that means. Kind of stuck in the muck here, it looks to me like. Seems quite intent on not getting into the value area anymore. above here. Lots of stuff up here. And what I would be keen to watch for is a reversion back to the mid, VWAP, and then POC, which are actually structured trades. I don't see anything here. This could kind of be interpreted as a half-hearted IB failure. The IB lows down here. We didn't really continue any further down than here. So is it now an IB failure back up? That's pretty open to interpretation, I guess. I would guess. Oh wow, it's only 12:39. I was thinking it was closer to 1. Yeah. 12 o'clock, they slam it around. There they go. Now, why did somebody decide that was important right there? What happened? And there's really no volume anyplace, or I've got something screwed up here. You notice there's no volume moving this. There's no big circles, or unless my thing's not drawn right or something. And it doesn't appear that that's the case. So there's every tick. Can't seem to get every tick going without having it all wide and smushed out there. Now we got some bubbles, cell bubbles here under the, these bubbles are delta. Red are cell delta and green are bi delta, pretty obviously. Let's see if we get a, yeah. I think we're going to test that, take that low out and all that liquidity. That's what I think. That's what I'm anticipating, but I'm not anticipating nearly enough to be on it short. Or, if I was, I'd be short up in here someplace. Wasn't really watching it, to be honest with you. I was thinking they were going to go higher. There we go. Now they're going to finally get into that pile of liquidity down there under 09. And then after they do that, there'll be stops galore towards value area low and yeah. I'll be pretty amazed if they can't get it below that into that liquidity below 49.09. That will be that'll be pretty surprising to me. Boy, they're teasing me. So tempted, so tempted, I guess you'd say, to put a long one here because I am expecting them or anticipating that somebody's going to take this thing up to those older values. But NQ is selling off, and my first suspicion is that we're going to take these lows out around, or all this liquidity out here around 49 to 48, and then we've got the string of singles down there from the overnight and value area low, etc. And the liquidity is burned through there. Yeah. Well, that's pretty interesting behavior there. A couple of icebergs, 457 and 6, whatever that says, 33. Buy icebergs went off there. Can't imagine that would be nearly enough to, well, I guess it was nearly enough to bring the market up here. In my opinion, that's just a defense for all these stops that are down here. Why would this guy have a iceberg there when he could be taking advantage of lower prices to buy? These guys that are all long have sell stops down here. Or he, I guess the other side of that is he knows that it's going to, these guys know that they're going to take out this liquidity and their stops below. So they're long. And then they're going to take advantage of the profit down here when the, yeah, that doesn't work right. I was going to say when the sell stops kick in, but that's not right. Yeah, I don't know. I guess those guys are, I guess the only logical thing that I see here, don't really think about that often. That's very definitely should. These guys could very definitely be then just taking profit on these shorts. And all the guys that have gotten long down here have sell stops living down in here, which are going to go that way, south of the border. South of the border, baby. Well, back to the IB low, huh? Yeah, what the hell? That's pretty hard to anticipate that. This big liquidity lifts out of the way. They don't get down 2 ticks to test these stop runs or any stops living down here below, and then that's going to go up and do this. Go figure. A random market and a bunch more liquidity jumps down below here now. So yeah, yeah, it is crazy. But any of the guys that were getting long down here and putting their stops down below are getting paid, so they're happy. Be happy, don't worry, I guess. That's a funny place right there, that 12,000 contracts trading just above the IB low. Wonder what the magic deal with that 13 is all about. Huh, pretty funny. Why? And from where? Well, back here again. Not sure whether this is going to go a situation I'd be trading or not. I was, as I've pointed out a bunch here, I was pretty really anticipating the stop run down here, and still am. But in the meantime, it's probably going to go up to the check the highs. I mean, who the hell knows? Again, with the zipper around the IB low, and then developing very, very low, and then the same stories as before. And I suspect that it's in the course of between now and the close, it's going to go zooming up back to the mid VWAP and all that stuff. But I would have thought, surely, I definitely anticipated they would take those stops out underneath there first. But I'll show you what I know. And the second I put on a long, it'll fall down below those. The thing about it is, this is no structured place to enter a trade for me, other than considering this IB testy westy, but this IB low thing. I mean, how many times are we going to slap around that to have it, to consider it a continuation or a failure? Perhaps being accepted into value would be another reasonable criteria, but I'm kind of getting over it. And all this liquidity coming in and out of the book, keeping those obstacles, the lid on the pot and the obstacles, hanging right over my head too closely for the risk neutral trades. Makes it quite uncomfortable. Undoable, actually. Or just, throw caution to the wind and slap along on it, but that's not probably the best idea. Well, now a little liquidity jumped underneath. So does that mean something? That's kind of an interesting idea there for a second, and then he's gone. And that's a high volume node and an MCVPOC, so it's a price check. Mm-hmm. Seems like quite an issue to stick this thing back in value. And that's required for higher. And, maybe it's going to happen right now. But not really a trade that I've ever vetted per se, which is a value area high, or a value area high or low. More of a something I'm familiar with in a gap situation. If we close the gap and get accepted into value, we'll oftentimes trade across it. This is being accepted within its own value. So, that's I don't know what that is. And then we got the previous close, previous open, or the open, the close. We're just about exactly back to where we started. And then a couple ticks. And I can foresee that this is going no place for me today. But I'll continue this deal, a stream, so I don't get in a position of being an opportunity to take until about 2:30. I'm going to make the bus run, and there we go. Very disappointing, though. There's a lot of opportunity, especially in RMT. But structured trades that I have an identified edge, not so much. Especially because of the scale and the range. That's been the biggest criteria today, if I'm not mistaken. Be real interested to watch the majority of this stream later. These long streams are something to watch, though, I will admit. Kind of listen to it while doing something else, and pick up the parts. That's why I try to keep the narration going. So, well, it's not why I try to keep it going. I keep it going so I can understand what I'm thinking in conjunction with what I'm seeing. $16 to $18. There's 2 points ahead of that obstacle, so that's not enough range. 15 to 18 would be just, but that means we're flopping right in and out of the value and above the ticket point of control. So that's a little bit dicey. Typically, an over-under would be this area up here, right? But that's way too late. Way too late. So there's a lot of chatter on the TLab about apparently there's been several folks short and taking the trades off down in here. So yeah, that's good for them. I guess I'm just too conservative these days. I guess. Out of sync with the market, whatever it is. But I will continue to stay the course here and vet the trades, pick out one or two or however many structure trades with defined rules and a positive edge and take them. I'd like to know how many people have a lower in range, test up to the developing value area low, short. Those are all the things that have to be incorporated to vet a trade. And I don't know what trades somebody would have been short on. Maybe the short off the high, but that's the VPOC again. So you're shorting out of there. Or perhaps the test of the value area high. That's real easy to say. There's all these times that it was tested up and down here. It was tested here. You got spanked hard. So, humans look for patterns real easy. So here, it's this one where it tested and then went down. Oh, what the hell's the difference between these three and this one? At the moment when the market's actually trading, that's the problem. It's that rear view mirror trading, RMT. That's the easy part. It's at the moment that is unsure for me, and why I'm trying to not just spontaneously, irrationally trade. Oh, okay. Okay, and now I keep thinking they're going to get up there and look at that VWAP and VPOC and mid, but, didn't expect or anticipate this even a little bit. Don't know what this was about. Grind up slowly. Just now up to test all of these little highs we've been at before. Consolidation, all right around the developing value area low. That's been a pretty substantial spot. Yeah, I've been looking for that squeeze up to the VWAP mid and VPOC quite a long time. Yeah, I have no clue what these guys are doing. Now they're going to come back down to the IB low and goof around. And so we've come out of the lunch hour. It's 1:30. A squeeze is entirely possible. The market's really short. What does any of that mean? I don't know. Don't know. Means I don't know. And then, so don't know is definitely not a trade. There's here, keep flopping around this IB low, and the only grasping for a reason to see a structured trade around that thing. And in reality, that IB continuation or failures, I think, loses importance as the day goes on. I mean, I don't know. I don't know the general opinion about that, but that's my opinion of it. And all I had to do was grab that long at the IB low and be now close to a scale. And it's just, what do you think? That's no trigger. That's no setup. So that's just a gambling trade. Near as I can tell. And back to that damn developing value area low again. One of these days it's going to come rocketing through there and to the moon, Alice. But this maybe ain't the day, or certainly not the hour of the day, I guess. So at some point, Tom was in a short for quite a while, I suppose. Who knows where. But this is just painful almost. This stuff here, between value area high, developing value area high, and maybe low. A lot of slopping around. happened a long time ago. Yeah, this is just like watching paint dry as far as I'm concerned at this point. I'm about ready to just slap one on for the hell of it. Very interesting, though, the trading volume here at 13, 15, 16. Or 15 half. Interesting that these are all considerably more volume than others in their price range, in that volume, in the value profile range, especially the 13. That's pretty crazy. I'm not sure. Must be a strike, I guess. Okay, so this is painful. To put it mildly. So this is just pretty crazy stuff here. This 13 level, almost double the volume traded any of the prices nearby. It's got to be a strike, and this past today, it's got to be, in my opinion, must have to do with options expiration or something, because it's the last Friday of the month. Nice window dressing or quadruple witching or whatever the hell it is. There's a penny. Well, they're going to actually take this thing up. I guess 12 to 13 would have been, 12 to 15 would have been the neutral scale. So well, that was probably an opportunity right here, and be scaled. And see if any of that higher ground comes to pass. It's been shoved up my ears. Not that I've taken any stock or trades. Every time we get close, it flips around. Not been enough range to scale. have no idea whether this is going to go or not. And of course, I missed that opportunity for the scale. Being bored, tired. How many times have we done this off of IB low and developing value area? Yeah, just perfect timing. The trade I've been looking for 2 or 3 hours and missed that original get go off the developing value area low, and then got chased out of the office here for a few minutes. Right here. So, yeah. Well, anyway, nice to know that my thinking was accurate and that I waited properly. It's unfortunate that I wasn't able to take advantage of that. Seems like timing is everything. Really frustrating. Yeah. So 18 to 21. Well, there is that move to VWAP mid would be a good long with the VPOC above it, right? But now, what have we done? One back at the IRT actually has it a little different. They've actually got it differently here. I'm actually seeing that the VWAP is lower on IRT. Perhaps that's just the full session VWAP, which is this right here. I'm so frustrated about staying here all day waiting for this thing to get past here with authority and not be in the room to take the trade. Pretty disappointing. And now just barely range. Just barely range for the
Order submitted.
see what happens here at
Order submitted.
529.
Order submitted.
All that stuff about 529.11. Okay. So we'll see what we do. Oh, that didn't work out like I had it planned. I must not be thinking very straight here today. This limit order should be below this for risk neutral. It should be like that. And
Order submitted.
that's pretty funny. This pop happened before just as I moved that, and it didn't take it out. So that's a piss poor after waiting all day. Now, if I can get a risk neutral off, what I will have to do is bring the trailing stop up. Oops. Do this real quick. There we go. Bring the trailing stop up to break even so that it is risk neutral. Oh, that's really disappointing. Ah, damn, this has just been an all around, not a very nice day. 525. So there's now I am risk neutral with that trade off. But you see where the break even line is because of the poor placement of my entry. So I now have to bring this stop way up to here.
Order submitted.
For scratch. So that's really a bad idea. Poor, I guess it's just a 531.34. I guess it's just a function of tired and frustrated. Well, we'll see what happens here now. If we can get some traction up, fine. And if we can't, it's okay too. But I mean, I'd like to obviously get up here to this POC level.
Order submitted.
And I'll put that just below there. A lot of liquidity in the way, IB high, et cetera, et cetera. So I think that's probably pretty dicey. But you never know. And if they get a squeeze going, this thing could go to the moon. So the important part is that I am risk neutral. I adjusted my stop up from down here because my entry was poor, miscalculation on my part, and I had to have my risk neutral scale below the first obstacle, which I did, which I moved from here to here. So that's an entry error, I guess, on placement. Yeah, that's about all I can say about it. And now the problem is going to be, I've got about an hour before I have to leave for the school, so I can't imagine this will drone on that long. I'm pretty sure some clever dick will come in there and hammer it. Can't quite get above that hidden VWAP for whatever particular reason. I'm not sure what the struggle is here today. But seems like there is one. Seems like there is a struggle, that's for sure. And of course, I'm based out of the office by the vacuum cleaner when this is happening. I've been watching this for an hour and a half. And I feel at a real disadvantage here because of this poor placement on my entry. And now I'm in a real vulnerable spot. The swing low is right here, right? So in order to be below that, I'd have to be out of my risk neutral area. So I'm just hopeful that somebody lights a fire into these guys and they get it going, which looks like that might be going to happen here now. And if so, that'd be great. If they put a squeeze on it and take the thing up to the moon, that would just tickle me to death. Short juice. And now comes the quandary of the trade management story. What do I do? Do I trail it up, leave it at break even, take it off here? We're approaching 24 ticks. This first stop is 24. Second target is 24 ticks. Did I? Funny, I can't save this thing anymore. I don't know what's up with that. Yeah, so come on, let's go, boys and girls. Let's show these shorts who's boss. Yeah. And I'm sure they're going to come back and show me who's boss. Maybe not. Be pretty disappointing to have traded this entire day and watch this whole thing. Watch this whole thing happen and then miss out on the squeeze. Somebody's predicting a stop pick here at VWAP, which I would be extremely vulnerable for because of this swing low down here. But that might be a logical idea. Before the squeeze or the 2 o'clock hour. Run up. So let's see. 19 to 23. Well, that would have been pretty nice. And I don't know what to think about this. Move the stop out of that range. That would be against all rules and regulations. If they do the typical IB maneuver, mid and VWAP maneuver, they'll buy, go long off of the retest from above. So I would hope that that's the case, but it is going to be what it is going to be. And the damn NQ's not helping out much. We'll see. We'll see what happens. Boy, that's irritating. Or will be irritating. Oh my. Keep an eye on this swing low right over here. Stop ought to be below that. If I had a proper entry, I would not be having any problems here now. There we go. Topped out for a scratch after all that. And notice what's going to happen here. Turn around and go exactly the other way. Yeah. But it's a scratch trade. And, disappointing because of the poor entry placement and disruption and confusion. The timing is just freaking amazing, isn't it? A stop to the tick, and just as the market starts to do what I'm expecting it to do, all hell breaks loose around the office here. Amazing after all day. Simply amazing. Well, that's pretty incredible. Stop to the tick. Wow. If I didn't have it recorded, I wouldn't say it, but I have both video and audio recorded, and that is really quite amazing. Hi, Panda. Cat's looking at me like I'm crazy. She's probably right. That's amazing. That's really amazing. Really flipping amazing. Wow. And I don't know what to do now. Entering another trade now strikes me as just FOMO. Maybe should have entered right back in when I entered right back here. But that's not a structured anything. That's not common sense. But boy, oh boy. Boy, oh boy. Is that disappointing. And I really don't know how to deal with that. Actually. Or I guess I could have left. Well, no, I was scaled, so yeah. Here was my original stop from the entry, miles away from the break even. But because of the removing the break-even scale down, I correspondingly adjusted the stop up to be within the break-even area for the risk-neutral parameters. So yeah, that was pretty damn bad all the way around. And here, to the tick and up, Jesus, really. Really pretty weird. And frankly, had I left the target where it was, not brought it down under the obstacle, it would have worked out fine. And this would have been down here, and I'd still be in it. So, you know, boy, there's a lot of things that I guess that's a perfectly good reason or evidence why not to change those parameters. And all day I've been watching for the right amount of scale, and I entered that trade without it, or range, and I entered that trade without it. So, you know, my fault. And it's a scratch, you know, so nothing ventured, nothing gained, but it is so disappointing, to be taken out of the trade by one, but to the tick, actually to the tick. And ironically, had I brought the scale, the stop exactly to break even, rather than one tick above to cover commission, I'd still be in the trade. So this will be a positive, you know, $12.50 or $12.50 or something stupid. One tick. Yeah, I guess one tick. Wow. Pretty crazy. So it's 14:02 Friday, 26th of January. One real frustrating trade after waiting 5 hours, which is probably going to take off and go just where I thought it was going to go, and would have been a lovely trade. But woulda, shoulda, coulda. The magic of trading. The magic of trading. I can't get over that timing. Just incredible. as I said, if I didn't have it recorded, I would never say it to anybody. But, talk about it for I don't know how many couple hours that I'm looking for this and that, and can't get above developing value area high or the low. Get up here to the developing value area high, and I'm doing something else. I've been transplaced out of the office. Get a poor entry location because I'm late. Should have been down here or down here actually. But to properly adjust my risk neutral, I bring the target down below the first obstacle, as the rule says. And because of that, once the scale hits, I bring the stop up to break even. Market comes back to the tick and takes off. Now, they may go on, to Jones's house down here. Who the hell knows? But at this point, when you're looking at it like this and fresh, it's pretty frustrating, and it's just incredible timing. How inopportune the timing, and just 30 seconds can change, and something like this. What are you going to do to bring that down now? Okay, you can see this liquidity. I guess I should have brought this down just under the liquidity, under the break even maybe. But that's not really the rule, so damn, But one trade out of a bunch, and there you go. And you see what's happening over here. And yeah. Now I moan on and on about this stuff, but it's, look at that. Just in the brief period of time I did that, we dropped down here and back up again in mere seconds. But, one tick profit here. So that's a big one. I'm going to splurge. I bought a piece of pizza. But anyway, and I may be wrong, but if I look at this precisely, there's the stop. There's break even. I always put the stop a tick above break even, so you take care of commissions, because in my opinion, that means break even. If I'd have put it exactly on scratch, it would still be in the trade. So that's even more magical. I'm watching the mic and the OBS stuff here. There's a lot of background noise again, but I don't think it's coming through. I think the background filters are set up well here. Yeah, I'm seeing no audio at all coming through the mic. I was worried about that. And here we're gonna go up and take them out. Now, of course, I could have re-entered. That's always a possibility, or I could re-enter on these test back down to the VWAP. But at this point, I'm kind of in a state of mind. Whenever something like this happens, I want to be sure that I'm clear. No revenge trading, no FOMO trading, no anything like that, right? And at this point in the game, I have to be mindful that about 40 minutes from now, 30 minutes from now, I have to leave for school. I'll flip on the walking base. I will close the stream before I leave, so that'll be that. And I'll mute just in case that background noise is wandering through here. Well, now what we have is a compressing consolidation here. You see how the highs are getting lower and lows are getting higher. It's just winding up the spring, baby. Winding it up, baby. You can see it over here, perhaps better. Boom, 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 boom. Which way will it pop? Whichever way it does, it's going to do so with authority, I guess. Well, I didn't realize I was on open mic. I hope that wasn't getting a lot of background noise. But anyway, yeah, here we go. Coiling up and yeah. Pop-a-rooney, I guess. Could be the case. Yeah, so unless they what appears to me to be a squeeze, and they're definitely coiling it up, something, or I would suspect a squeeze up. I would try to jump on you, get the first scale out, and you know either if it's moving fast enough, bring the stop up to that first scale, or just hit out of it and hit the eject button. Because I am up against it for time. Likely that will not happen because those drafting closing swing trades things are fun and fierce generally happen in the last 15 minutes or so. And so I'm going to be in the car picking up our sweetest daughter. It's Friday. Yay, Friday. Yay, Friday. Yeah, so we're going to just kind of fuss around, fuss around here, yeah. And 20 after. Yeah. So I don't think I remembered. I didn't. Stupid. Didn't remember to get a snap of that most wonderful trade. Oh, it's still right there, so that's not a problem. There you go. Well, there it is. It would have taken me out anyway. So there you are. And I'm not going to try that again at this point in time. It's probably going to dump off to the short now. Well, who knows? Go figure. Go figure. But the second, I think that somebody will hit the gas and away she goes. Back to the back to our old pin, the developing value area. Low. All right. Okay, I got to do things like find my pants and stuff like that here so I can leave the house, not be arrested. Hmm. Yeah, so there they are. Well, I don't feel near so bad about my stop to the tick over here, but no, still irritating. Would have been much more rosy that never mind. Stupidity. Woulda, shoulda, coulda. The rule says I do what I did, and that's what I did. Yeah, so hey, buy a piece. I can pay for my daughter's Starbucks here after school. Like $12.50 for my day's work. Sucks. But yeah, I'm gonna Okay, now. That's good. What's going on over there? Oh, that's pretty nice. All right, so I'm going to shut her down here at the bottom of the hour, or I'll pick a time on the stream. It's going to be 6 hours and 15 minutes. That would be. I started at 15 after the hour this morning, 15 after 8 this morning, so that would be easy to compute back and forth on the time scale. And yeah, have a great weekend.